measuring with state polls is how the particular makeup of those groups is feeling on that day. For example, if the president is doing better among Hispanic voters, then states that have, blocks of Hispanic voters may see a shift in that direction. So in the absence of good state polls, a good national level poll will give you a sense of like where things are trending. And also in this particular race, they really just aren't trending. This president has been frozen in amber since day 5 or so of his presidency. Opinion has not changed on him. The conventions didn't change the dynamic. Not a lot has changed the dynamic. So that's the other thing to look at is that, unless there's a really big swing, things are pretty much basically where they've been.
Good morning to you, Ryan. I'm transfixed by some lovely graphics attached to a piece that you've done for Bloomberg.com this morning, which asks how badly could the election go, by which I think you don't mean a particular electoral outcome, but just the process. How messy could it be? How distracted could we be, and for how long by this process? We have to go back to, 1876 and 2000 to find very messy incidents around the US election. And how bad could it get then? If we play this game that you've set up for us on Bloomberg.com, how bad a situation could we see unfold?
Yeah, so I've been talking with a lot of constitutional experts and political experts and people like that, trying to game out the different scenarios. And I just say, there are some deeply weird outcomes that are entirely within the realm of possibility in this particular election. Now, the U.S. system is President Obama's energy. It's kind of a Rube Goldberg contraption, and there's always the possibility of some weird outcomes. But the fact that we have two candidates who are very unlikely to concede if it doesn't look like things are going their way because their supporters don't want them to, and because there will be questions on both sides, some legitimate, some not, over how we got those results, I think you're much more likely to end up in one of those weird places.
Ryan, one of the things percolating right now, Kevin Surley's brought this up, but many others as well, is that we've all made up our mind. How large are the undecideds right now?
There is really no undecided group right now in America. The question for November is who shows up, which people decide to vote, and which people are able to vote if there are problems with how the voting process works. So I don't think that there's really, polls don't show that there's very many people who are undecided, and the polls also show that there's an extremely high number of people who have chosen a candidate who say that there is literally nothing that would change their mind. Like, they have decided they're either for Trump or they are against Trump, essentially. They're for Biden, but mostly they're saying that they're against Trump. And nothing is going to move them.
Ryan, don't be a stranger. Ryan Beckwith, thank you so much. Ryan Teague Beckwith with us today here on the polling, trying to bring some common sense to the frenzy that's clearly out there. This poll, just in that one. You don't need a poll on retail. It is challenging, to say the least. I love using this word with this guy. Exclusively. The gentleman who invented the word exclusive for retail department stores. The founder of the modern Saks Fifth Avenue. I would say that's accurate. Stephen Sadoff joins us in the 7 o'clock hour. An update on the challenges in this pandemic for retail. Futures at -14. This is Bloomberg Surveillance. Good morning.
This is a step in the right direction. Perhaps it's a harbinger for more changes in the future, like the completion of the banking union.
This is Bloomberg Surveillance. I'm Ritika Gupta. Let's get your Bloomberg Business Flash. China is taking steps to counter Trump administration restrictions on semiconductors. Beijing plans a sweeping new set of policies to build up the domestic chip industry over the next 5 years. Bloomberg has learned that the Chinese government's putting the same kind of priority on the effort that it gave to building its atomic capability. The SEC is investigating Robinhood Markets. Bloomberg has learned the question is whether the online brokerage informed clients that it sold their stock orders to high-frequency traders and other Wall Street firms. The probe has to do with Robinhood's disclosures before 2018, when it made it easier to find information on how it made money. And a group of buyout firms reportedly has made a takeover offer for railroad operator Kansas City Southern. According to Dow Jones, Blackstone Group and Global Infrastructure Partners made the bid after a previous offer was turned down. Kansas City Southern has a market value of more than $17 billion. And that's your Bloomberg Business Flash. Tom, Anna.
Ritika, thanks so much. Waiting on claims, 8:30 this morning. Futures deteriorate, -11. Dow futures at -23. Anna?
Yeah, plenty of data to watch for stateside then as we go through the session. European equity markets still solid, up 1% on the stock 600, but catching up really with the US. NASDAQ futures pointing to the downside, down 0.9%. Coming up next, Alan Ruskin, Deutsche Bank's chief international strategist. How is the manufacturing sector adjusting to the new normal, and how do you invest around that? We'll talk about that next. This is Bloomberg.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Live in London with Tom Keane in New York. We've been looking this morning at high-frequency data coming out of Europe and some suggestions that seems to be rolling over. Add to that the PMI data out from Europe, and perhaps we have a worrying picture in front of us. Let's ask Alan Ruskin, Deutsche Bank Chief International Strategist, about the strategy then for European assets with that in mind. Alan, very good to speak to you. So we see this Euro area recovery perhaps running out of steam midway through the third quarter. How much do you invest around that theme? Do you see that as something that detracts from the appeal of European assets?
Yeah, I think it's an open question. I mean, if you look at European equities, they've been vastly underperforming U.S. equities, particularly U.S. tech stocks. So that's already, a feature of recent financial markets. It's going to be pretty crucial, I think, how we see countries like Italy and particularly France, I think, respond in terms of upcoming data. Italy's data start to look softer again. France, which really has been quite resilient, is also starting to soften just a little bit, basically. So I think we need to see, what's really happening with, those two very big economies. We know Spain is relatively weak already, so we can't just rest on our laurels and hope that Germany can just act as a locomotive for all of the EU. So there is some vulnerabilities there for sure.
And Alan, looking at the global data, you make the point in your notes that manufacturing is perhaps adjusting to the new abnormal. But what about services? So dominant in so many of these developed markets, and yet so difficult to get services back up to par.
Yes, I think, services clearly are unusually very cyclical. Normally you see the amplitude of the business cycle all dominated by inventories and manufacturing sector. That's totally not the case with this pandemic shock. So services being much the larger sector in all the developed economies is more important really than what's going on in manufacturing. And the PMI data looks okay, but I think it inflates the view of what's really going on. We know that any of the service sectors that are dependent on social interaction are getting hammered, really, and there's no end in sight until we really get a vaccine. So I think we know that monetary easing is leaking its way into other areas. It's leaking its way, for example, into housing and auto sales here in the U.S. It's leaking its way into manufacturing in general and the services sector that is not dependent on social distancing.
Alan, I want to congratulate you on your call that the earth would keep turning through all of this. I thought that was a brilliant call. Part of that forecasting, Alan Ruskin, is Deutsche Bank and your head economist Peter Hooper's call that if we don't get stimulus, if we don't get some oomph, we could really run into challenges in Q4 of this year in the first quarter of 2021. How will markets adapt and adjust and anticipate in October and November a really difficult slowdown to come if we get it?
Yeah, I mean, it feels like such a long way off. Tom, we've obviously got to negotiate the U.S. elections as well in the interim with all the uncertainties and all the new policy initiatives that will bring. But, if we do look at a period, if there's a gap where monetary easing is wearing off, which is probably going to happen pretty soon, and we do face a genuine fiscal cliff, and there's that gap between this policy stimulus wearing off and a vaccine, taking hold and giving, some oomph, as it were, to financial markets. That is, a particularly fragile period, and that could really coincide, as Peter's mentioned, really in terms of Q4 and Q1. There's points of real vulnerability there.
Well, what will the markets do?
New order placed to sell short, and the order was executed for euro at 1.8223. I already sold short, position open for euro short position 1.18223.
vulnerable. The areas, particularly as it relates to tech stocks in the U.S., could be more fragile, certainly in any sort of downturn, that we see from a global perspective. As to other markets in a sort of a more sort of global view of things, equities have come back, pretty strongly, but not as strongly here in the U.S. But, can these markets retrace another 10, 15, 20%? Absolutely, really, if we do get, a considered downturn, and we don't have the optimism that we've had most recently that relates to a medical solution. I think that last part is absolutely crucial. The market has continuously taken an optimistic view in terms of medical solutions to this pandemic. If that wavers, I think that'd be even more important for markets going forward.
So, Alan, would you go so far as to suggest that markets are already pricing in a vaccine coming at some point in the last quarter of this year or early next, or would that be to overstate it? Is there still some upside from success in a vaccine?
No, I think there is some, there absolutely is some upside if we do get some success. I think, what we have is a situation where there is what amounts to a fairly fat tail, that a vaccine is not necessarily all-encompassing and all successful. And I think the markets, have some of that priced in for sure, particularly globally and particularly in sectors which have been most hurt by the pandemic. So I think there's plenty of upside. I think it would, lead to quite a rotation back into service sectors which have been most hit by, the pandemic. But, I think there's definitely upside for the overall market as well.
Alan, thanks very much for your time. Alan Ruskin of Deutsche Bank. Thanks very much for joining us. And in fact, stay with us. A little bit more to come from Alan. Let's get a Bloomberg First Word News update. Here's Ritika Gupta.
Thanks, Anna. The CDC says states should prepare for a coronavirus vaccine to be ready just a couple of days before the presidential election. That's an aggressive goal that would depend on shots being tested and reviewed by then. President Trump has previously said he thinks a vaccine will be ready by Election Day. That claim has raised questions about political interference in vaccine reviews. President Trump is once again denouncing voting by mail. He told a crowd in North Carolina that if they vote by mail, they should also go to the polls to try and vote a second time. He said that's a way to determine whether their mail ballots were actually counted. That could lead to voters violating the law if they try to cast a second ballot. And President Trump has ordered a review of federal funding for what he calls anarchist cities. It's aimed specifically at New York, Seattle, Washington, D.C., and Portland, Oregon. All are Democratic-run cities that have had protests demanding racial justice. Any move to restrict federal funds would probably result in a court case. And in baseball, Hall of Fame pitcher Tom Seaver has died. Seaver turned the New York Mets from lovable losers to World Series champions in 1969. He's one of only two pitchers to record more than 300 wins, 3,000 strikes, and an earned run average of less than a 3.0. Tom Seaver was...
I'm placing a stop on profit for 118.2003. Stop on profit on euro at 118.203. All right. Okay, let's see where it will go.
don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
I closed position on euro at 118.203. We have a profit, £200.
Tomorrow we'll go beneath the headline data. Right now we are advantaged by having with us Alan Ruskin, Deutsche Bank's Chief International Strategist with some significant dynamics education in computer science and statistics long ago and far away. Alan, it's called Greek letter envy. And there can be alpha, there can be delta, there can be beta, there can be gamma, there's theta, and all the rest of them. What it amounts to is the management of that age-old thing, greed. Larry McDonald has a fabulous quote out today in his research note where he talks about greed breaks things. Right now, we're in the midst of some complexities as this market vaults ever higher within summer illiquidity. How does that play out?
Great question, Tom. Look, I think the equity market is clearly trying to reprice off some, unusual events that are going on. The global economy, the data surprises actually have been positive. The Federal Reserve and its change of regime, in terms of the average inflation targeting is a significant event. The 10-year yield at 0.6, 0.7, on a consistent basis in that sort of range is a big deal in terms of what sort of P ratios we should price off. So I think we're just trying to establish a re-equilibrium here. But it does feel to me like the speculation is getting narrower and narrower. It does feel like it's very much hemmed into, a few top tech names. And so I don't think that's a good sign, basically, for the market overall.
In October of 1987, we learned about a phrase called portfolio insurance. Let's call that a derivative strategy. And then there were 5, 6, 7, 8 once-in-a-lifetime events wrapped around derivative strategy. Do you detect right now, as McDonald mentions, a set or single derivative strategies that could get us into trouble, whether it's notional or some leverage here? Are we walking into a leverage that we can't see right now?
Look, I think maybe we can see the leverage. I know certainly I've seen charts circulated about the extent to which single-named call buying is occurring. So, and that's very much, again, concentrated in tech-type names. So that tells you something about, the fact that people do want that, the derivatives-related leverage. Whether it's systemic in terms of risk is another story. I think the Fed probably feels we can manage a downturn in select tech names if that's what's going to happen. As long as the overall equity market doesn't really tank and doesn't resemble what we saw for brief periods in March. So I think the overall systemic view of things would be that, look, if the S&P comes off 10% or something like that, or those orders of magnitude, 10, 15%, well, that's still manageable within the context of what's happened.
Yeah, maybe we prepare for that then, Alan. Do you see anything in the VIX, perhaps, that we should worry about? We've been caught off guard by a build-up of positions around volatility in the past, I know, and there's been a lot written recently about where the VIX is in relation to a lack of volatility and consistent upside moves in US stock markets. Does that divergence in performance, does that give you reason for concern, Alan?
Yes, I think it speaks to the same features I just mentioned in terms of the call buying that's already occurring, that you have this very unusual disjuncture between have really pumped up implied vols relative to realized vols. Now, some of this really relates to, the uncertainties both going into the election itself and then post-election. But it's not all that. I think, even when you get out to, if you look at the VIX in February, March, correct me if I'm wrong here, but I've last saw them in the sort of upper 20s, really. That looks very high in relation to realized. So it tells you that there's a lot of underlying demand for hedging effectively some downside fear, as it were. So, there's something to be fearful for at these kind of levels, but I think people feel they have to be engaged. You can't just sit on the sidelines. So that's not a great feature when you're effectively chasing markets and you're working on who's the greater fool, basically. So I think there's fragility there for sure, and this VIX realized discrepancy is definitely indicative of underlying fear, and that general idea that the air is rarefied up here for certain stocks.
Okay, Alan, yeah, we've certainly come a long way, haven't we, on those tech stocks, and there's a lot to negotiate in the fourth quarter. Alan Ruskin of Deutsche Bank, thank you very much for joining us here on Bloomberg Surveillance. Coming up next on the programme, another thing to negotiate, of course, is the underlying news flow surrounding the virus and the vaccine. Jason Farley, Johns Hopkins Professor of Nursing and Infectious Disease, trained nurse epidemiologist, joins us next to give us his insights. This is Bloomberg.
We are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with 17,000 additional jobs added in terms of net revisions.
You still got 1.8 million with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed. But the good news is that it is continuing. And it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
What you need to be watching on Friday, the main event, U.S. payrolls report closing out the week. It is a big week. This is Bloomberg Surveillance. I'm Rishika Gupta. Let's get your Bloomberg Business Flash. The Trump administration will set the scope of its bans on Chinese social media apps TikTok and WeChat. Bloomberg has learned that around September the 20th, the Commerce Department will clarify the transactions that will be prohibited between US companies and the Chinese firms. Separately, President Trump has told TikTok's owner to spin off its US operations by the middle of the month. More job cuts on the way at e-cigarette maker Juul. The company also is thinking about exiting more European and Asian markets. A health crisis surrounding vaping sent Juul into a tailspin last year. The once high-flying company has already laid off about 40% of its workforce and halted its global expansion. No word on how many jobs will be cut this time. And this year, Walmart's top holiday toys will be marketed to exhausted parents. The world's largest retailer acknowledges that children are spending more time at home because of the pandemic. It's offering what it calls energy-burning outdoor toys and screen-free indoor entertainment. Now that is your latest Bloomberg Business Flash. Anna?
Ritika, thank you very much. Ritika Gupta there. Now, as we continue to track the virus, Bloomberg has developed a unique partnership with the leading authority on COVID-19. Johns Hopkins has been at the forefront of the international response. Every day, we bring you insight from experts in public health, infectious disease, and in emergency preparedness. Today is no different. Today, we're joined by Jason Farley, Johns Hopkins nursing professor. Professor Farley, really good to speak to you. I've been reading about how early results, so-called interim readouts from various trials, could be available as early as the middle of September. And I wonder what we should do with that information. What can we expect from these early readouts?
Oh, well, good morning, Anna. So, you know, the preliminary data is always, for any type of clinical trial, is always taken with some grain of salt. We need to be hopeful about these findings, of course, but they are preliminary. So what we're basically going to be seeing is patients who've been enrolled in earlier trials, their antibody responses. We won't know much about durability. We won't know much about the potential for exposures or reinfection, but we'll know how well they do or do not produce antibodies, which is similar data to what we've already been seeing in the studies that were done in phase 2.
Bearing that in mind then, Jason, what is the optimal speed at which authorities around the world, including the FDA?
Yeah, that's a great question. So at least in the United States, the FDA, the Food and Drug Administration, has a couple of different options. Obviously, with any kind of clinical trial where there's randomization to a placebo or an intervention like a vaccine, we have a data safety and monitoring board. These are the people who are external to the trial, whose job it is to review the data and say, is there signals of a response? And if there's not, they can stop the study and end it early. If there is, they can, allow it to continue to go. But if there's a strong enough signal that says, hey, there's great response here and it's actually helping to prevent disease, they can fast track a vaccine or any kind of intervention study. And so what that data safety monitoring board will be doing is monitoring this data independently of the investigative team. And it's really their decision on how fast the trial continues to move forward. Importantly, however, public trust is really essential for this vaccine, not only for its uptake, but also for, when we think about the way the public thinks about the speed of things. We're hearing a lot of anecdotes right now that the public is mistrustful of us going too fast. And rightly so, because side effects and other types of responses from vaccines take time to know and to understand. And so we need to monitor carefully and slowly and to ensure that we have the right and safest possible vaccine options.
Is it possible to fast track, though, just after these interim readouts, or do you have to wait? Do you have to wait longer?
So I think there's the right way and then there's the fast way. So what we should do is wait until we have the trial completed and the Data Safety Monitoring Board has made its final analysis. But ultimately, I think governments are really looking for speed here. And so, again, I think the most important thing is that we get the safest and most efficacious vaccines to market. And the timeline for that really depends on the science and not the speed in which that can occur. It really, whatever data we're receiving, whatever signal we're receiving, whatever safety profiles we're able to review, that's what should drive that decision making, and not a rush that could put patients' lives and the public in danger.
Jason, thank you very much for joining us. Jason Farley of Johns Hopkins. Be sure to check out Virus Go on the Bloomberg for the latest information, and tune in every day for our exclusive conversations with Johns Hopkins experts for an inside look at battling COVID-19. Let's get to the data then as we bring this hour of surveillance to a close. We've got European equity markets up by 1%, lifted by expectations perhaps of the virus, but also by fiscal stimulus coming through, details of that being announced in France. So that's one driver. We see the CAC 40 with that in mind up by 1.8%. It is a broad-based rally, though, not just all about tech here in Europe. It's about many other sectors rallying today, catching up, though, really with the United States, where we see US futures pointing to the downside. So NASDAQ futures down by 0.9%. We did see the rally in the States yesterday, though, was about more than just tech. And so will we see a continuation of that later in the day? For the moment, it looks as if US stocks will open to the downside. Coming up next, more Bloomberg surveillance, simulcast, of course, on radio and on Bloomberg TV. This is Bloomberg.
Novartis. How has it shaped the leader you've become in dealing with this pandemic?
What I find to be incredibly valuable in a situation like this is having that breadth of experience leading large organizations.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
actually much more rationality happening in the equity market when we look beneath the surface.
There's all this comfort globally around debt levels, and at some point it'll be too much.
The Fed needs help, the Fed needs a partner, and the partner is fiscal policy.
Fiscal stimulus would obviously be a nice to have. I don't think it's a need to have.
One reason not to be pragmatic is fear of instability, which doesn't seem to be in the cards.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From the City of London, good afternoon for New York, good morning for our audience worldwide. This is Bloomberg Surveillance Live on Bloomberg TV and radio, alongside Lisa Abramowitz, and back together with a man called Tom Keene. Tom, I feel like we should just deal with the elephant in the room.
Stop. Cut to the chase. How was Tuscany?
For a long time. Tuscany was beautiful. We negotiated that new contract for Zlatan. He's staying with Milan for another year, and I thought I might as well stop by London and make it count, Tom. I know you've missed me. Everybody's been messaging me saying you've been crying every single morning.
God. You know, this has been something, folks, but we are thrilled to have this. And frankly, folks, there's a lot going on in Europe, so it'll be great to have John over in London here for a bit to keep track of things. John, just to go to the, away from jobs, away from all the news flow we've got. And I mentioned this to Anna Edwards. John, I am thunderstruck by the tone of Mr. Barnier in a London, a United Kingdom, is not even responding. Is Brexit fallen off the United Kingdom map?
Tom, can we agree on one thing? Just because I'm here, I'm not the Brexit correspondent, that you are still going to be our senior Brexit correspondent. I still have very little interest in that debate. I want to talk about this market. Equity futures down. Tom, I've been off for, 3 months? I think there's been 2 down days in that whole time, Tom.
Well, yeah, absolutely. And, of course, we've seen a pairing back here. Futures negative 13, Dow futures negative 37. John, I think it's just a pause, and I think there's a lot of buzz out there right now about the lack of liquidity and people hedging along the way, creating an acceleration ever higher. That will be tested in the coming days, particularly off these 2 days of labor data.
I just feel lucky that we have Lisa Abramowitz with us as well, keeping it together for the last 2 or 3 weeks. Lisa, fantastic to catch up with you. 90 minutes away from jobless claims in America.
Yeah, we're going to be getting that at 8:30 a.m. Eastern. We're going to be getting that read on the past week, sort of a drumbeat to tomorrow's August jobless claims. We are expecting 950,000 claims, which is less than last week, less than the week before, yet still vastly elevated compared to recent history. 10 a.m., I'm interested in services, the idea that we've seen this divergence between a robust recovery in the manufacturing sector and a lagging services sector. We'll get a read on that. Also today, former Vice President Joe Biden having his turn in Kenosha, Wisconsin. My family hails from Wisconsin, so I have particular interest in Wisconsin. But I will say, very interesting to see how Biden really shapes the law and order debate, which has really entered the front and center of the presidential race, John.
Lisa, busy day ahead, 24 hours out from payrolls. Let's get the price action as we count you down to the opening bell this Thursday morning. Good morning to you all. Equity futures just slightly negative, down 14 on the S&P 500. We're down 0.4%. In the bond market, yield 0.66% on a US 10-year. And in foreign exchange, euro dollar had a little look at 120. Yes, please. No thank you was the response from ECB chief economist Mr. Lane. Tom Keene, the first sign of verbal intervention from the ECB in the last 24 hours.
There it is. We've been looking at this, John, on your sabbatical. This has been front and center. At what point do they start jawboning the euro? The pros, John, for the most part, have set a 130 level, strong level. I've never bought that for a minute. To me, it's a much closer level where the euro becomes a problem, and we're beginning just in the last 48 hours to see that discussion begin.
7:03 in New York, midday here in London. Lisa, should we play a drinking game?
Please.
Sabbatical.
Yes.
That's the buzzword. Every time Tom says the word sabbatical and my sabbatical, you have to take a shot.
I am so game. You provide the alcohol. I am right there with you, John. I swear.
Tom's got some alcohol under the table, I guarantee it.
I will say, you are taking social distancing a little too seriously. You know, I do miss you here in the studio, but glad to see you're holding down the fort in London.
That's how things should be, Lisa, between two people that like each other. I miss you too. Amy Boyd-Silverman joining us now, RBC Capital Markets Equity Derivatives Strategist. Amy, great to catch up with you. Are we at risk of trying to justify the unjustifiable, looking at this equity market and where it is right now?
That's a tough question. Honestly, probably a little bit.
What gives me hesitation, especially as an options person, is, we've seen this phenomenon over and over this summer where the markets go up and volatility goes up too. We refer to that as the spot up / vol up dynamic. But, intuitively, you can think of it as when the markets go up, the people in the market are getting more nervous rather than less nervous, which is not the traditional way the relationship should work, and should definitely give investors some pause.
Should our viewers and listeners, Amy, should they ignore the pros in their derivative strategies right now?
It's funny because we look at a lot of data, and part of what we've seen is a lot of historical relationships break down. And when that happens, you get a lot of exuberance. So to give you an example, I think part of what has happened is in kind of the last few months, retail has really been right in saying, look, these traditional relationships don't make sense. You get the volatility up and you get the calls up and the market goes up, and that's okay. But the reality is, over time, these do all normalize. It's just very, very tricky to say when the music will stop. But, when you look at 20, 30-year time periods, when these relationships flip like this, they almost always revert again. So I guess the answer to your question is always one of timing.
Well, Amy, to that point, talking about the little bit of softness today after a completely solid run that's seen risk rotate into the most speculative areas of markets, do you see this as a lasting trend that will be with us through the end of the year and through the November volatility of the presidential silly season, as Tom likes to say, or do you see this as a blip, as Tom was saying, this idea that this is going to be a momentary buy the dip moment, the dip being tiny?
Here's how I think about the timing. Through the election right now, the options market is extremely bid. But at this point, I honestly think volatility through November is probably fairly priced, if not a little bit expensive. What I actually think is the really interesting part of the term structure right now is when we get a vaccine that is one that everyone is comfortable with, one that is accessible, and you can pretty much say, okay, this coronavirus pandemic has effectively been solved. I think when that happens, you're going to get a very interesting divergence in the markets, where this narrowness of breadth we've seen, where really it's only 7 or 8 stocks driving up the whole market, they start to sell off hard, and you get a really weird situation where in the S&P 500, you've got 490 stocks rallying, but the indices are actually down because of what happened with the overweighting in the market cap. So I think you get this very strange situation where the broader multitude of companies are rallying, but you actually get headline indices down, despite it being a good thing. And that's where we think a lot of these outperformance trades between different indices come into play in an interesting way.
Amy, what do you make of the fact that equities have carried on rallying through the month of August into September, and high-yield spreads have stopped tightening?
Yeah, I think that's interesting. I think a little bit of what's been happening, at least on the equity side, has been driven by the derivatives market. And so there is more technicals at play. We've really seen that in the tech side, where, we've seen more than $1 billion of premium bought in terms of tech upside, calls and call spreads, and kind of across the board, 10 of the biggest mega cap names. And so what's happened with that is it has exacerbated some of the second order derivative effects, and that, tends to drive the market up in these names. And the problem is these names are such heavy weights in the indices that it is thereby driving up the indices. But what I thought was interesting is in the last week or so, we're starting to see the positioning in the options market actually flip to the downside. So we're seeing in the March and April tenors of next year, actually downside in tech being bought as opposed to near-term upside being bought. And so I think you do start to see that reversion coming in.
Amy, thank you so much. Amy Silverman with us with RBC Capital Markets. John, I think this is just absolutely extraordinary where we are right now. We all know that. But the outcome here, and John, I'm going to go back to the economics of the moment. We have claims today, the oddest of odd jobs reports tomorrow, and I really don't know where the market will be or if it will break late Friday and into Monday or Tuesday, I should say.
Well, Tom, let's start with the good news. The economic recovery has continued. Many people called for a big fade later in the summer. It hasn't materialized so far. Many people, you will remember a month ago, thought we might get a negative payrolls print. We didn't get one. It was positive. And most people assume we'll get another positive one in the next 24 hours, Tom. The biggest issue I have with where we are at the moment is people and their ability to comfortably justify why we are where we are in this market. And Lloyd Blankfein did a fantastic conversation with Hank Paulson recently in a podcast. And they touched on something that I've been thinking about for the last couple of months. If I told you at the start of the year, every single data point, every input, every policy response, would you have guessed where this market is right now? And Tom, the answer overwhelmingly for most people is absolutely not. So why are we so comfortable explaining away why the market is where it is, where the reality for so many people away from Wall Street is so different?
Yeah, this is the inequalities, the inequities we see. And Lisa, to me, it's just absolutely extraordinary now to see the partition that we've observed here over the last 2-3 weeks in New York City, the partition of America.
Yeah, the huge jobless rates, job losses across the board. John, while you were gone, guess what happened in Washington? Absolutely nothing. And I think that this, to me, is one of the biggest conundrums, the idea that people were saying if we don't get some sort of fiscal support, an additional round, we are going to see job losses that pick up steam yet again. We have nothing on the docket. Mitch McConnell coming out yesterday saying it doesn't look good, yet the markets are pretty sanguine. That seems unexplainable to me, John.
Elisa, more than that, many people, in fact, so many people came on this program and said if we don't get a fiscal deal, if we don't get an agreement down in Washington, D.C., this market would get in trouble. This market has not got in any trouble whatsoever. I've been away a while. I've got to remember the break structure. I think it's 12 minutes past the hour. From New York City and London, for our audience worldwide, with equity futures down 14, this is Bloomberg Surveillance.
With the First Word News, I'm Rishika Gupta. The timing on this may raise some eyebrows. The CDC has told states that a coronavirus vaccine could be ready by November the 1st. That's just 2 days before the presidential election, and it's an aggressive goal that would depend on shots being tested and reviewed by then. President Trump's political future hinges on the response to the virus that has killed almost 185,000 Americans. New polls show Joe Biden leading President Trump in 3 swing states that the president won 4 years ago. According to Fox News, Biden has the edge in Wisconsin, North Carolina, and Arizona. In all 3 states, Biden shows strength amongst women and suburban voters. Secretary of State Mike Pompeo has imposed new limits on Chinese diplomats in the U.S. The curbs have to do with visits to college campuses, meetings with local officials, and cultural events. The U.S. is taking the steps to match Chinese limits on American diplomats. And China is moving to counter Trump administration restrictions on semiconductors. Beijing plans a sweeping new set of policies to build up the domestic chip industry over the next 5 years. Bloomberg has learned that the Chinese government's putting the same kind of priority on the effort that it gave to building its atomic capability. In the East China Sea, 1 man was rescued after a ship carrying 43 crew and 5,800 head of cattle overturned and sank. The survivor told the Japanese Coast Guard the ship had engine trouble and capsized when a wave hit it. A typhoon swept through the area this week. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I do double down on helping other Black founders, whether it's fundraising, hiring, growth, product, whatever it is that they need.
The investment bank merger is something we have been discussing actually for months. This is not a cost exercise. There will be some cost benefits, but it's really about having one underwriting business, to have one investment bank globally, one equities business.
We're simply demanding reciprocity. Access for our diplomats in China should be reflective of the access that Chinese diplomats in the United States have, and today's steps will move us substantially in that direction.
Reciprocity, a word you will hear many, many times from this administration and the next one and the next one on the relationship between China and the United States. That was Secretary Mike Pompeo. Here's your price action this Thursday morning as we count you down to payrolls tomorrow morning, and later this morning we'll have initial jobless claims for you as well. Equity futures down 0.4%, negative 16 points on the S&P 500. In the bond market, what a turnaround from last week. Chairman Powell pulling the floor out of underneath treasuries, and then all of a sudden in the last week we turned back. Yields have been grinding lower to 0.65%. We are unchanged on the session. In foreign exchange, euro dollar 118.10. That is a weaker euro on the screen. Tom Keene, that is a stronger dollar. That currency pair coming in 0.4%.
And John Farrow deteriorating through the morning and just breaking down to new weakness. The Turkish lira with a 7.44 print. We're not going to dive into this right now, but this is a substantial move and something you should have on your radar. Global Wall Street. Turkish lira holding at 7.40, and that is evaporated this morning. What is also evaporating within American politics is a view to the foreign policy, as we just heard from the Secretary of State. Kevin Cirilli knows it is domestic on, campaign on, our chief Washington correspondent. Kevin, gauge for us right now what matters for these two campaigns. Is it the continued law and order, the statements of Portland and Kenosha? Is it the economy, or is it something else you've gleaned?
You know, yesterday there was a major development that is really going to upend this race in the month of October, and that is that the CDC came out and said that states should be ready for vaccination implementation by November 1st, 2 days, of course, before the November 3rd elections. It also comes upon the same week, Tom, in which a nonpartisan panel of scientists in a nonpartisan scientific community sent guidelines to the federal government as it relates to who ought to get the vaccine first. The vaccination is proving to potentially be the October surprise. How the rollout of this vaccination and the approval process goes, and whether or not Americans trust the approval process in the United States for the vaccination, truly could be a collision course for the economy as well as the pandemic.
I hate, Kevin, are there any adult medical doctors who say we're going to have a vaccine before November 3? I haven't heard that.
Well, in terms of the approval process, if you look at the guidelines from the federal government, you've got a handful of vaccinations that are already in phase 3 development, and a handful more in phase 3, as it's called, worldwide. And so really the reason I bring this up is because this is exactly precisely where the coronavirus medical concerns, and the certainty that a vaccine provides in terms of getting people back to work, into the classroom, into the bars and restaurants and gyms. As it relates to that, it's also a political issue in terms of the rollout that could really impact not just the markets, which everyone's looking for vaccination news, but also, of course, for certainty in the economy.
Kevin, the election 2 months away. There was a wonderful editorial in the Financial Times this morning here in London on a simple question that the Democrats want to ask the electorate, which is who can fix the pandemic? But this administration wants to ask a different situation, a different question. Who can secure the cities? And what the author of this piece identified is that whoever's doing the most explaining is losing. And right now, former VP Joe Biden is doing a lot of explaining about the riots across cities in America. Is he starting to lose the argument?
Well, I would also argue that presidential elections are about the future. And so for any candidate to be talking about the past, even if it's only 6 months ago, is potentially a political misstep. Look, 255, that's my magic number this morning. 255 votes are what separated the 2016 returns from President Donald Trump to Hillary Clinton in Kenosha County. So Kenosha County, 255 votes is what separated it in 2016. This is the first time a Republican carried Kenosha County in decades, John. And so this is why you've got Biden headed to Kenosha County today, and the president there earlier this week.
But this is the point, Kevin. This is the conversation the president wants everybody to be having right now.
Yes.
Not on the pandemic, because this is where he polls terribly, but on this situation, on this question on who can secure the cities. Because for the president, he's got a message to sell, and he's selling it, that the people rioting are the people aligned with former VP Joe Biden. How does Joe Biden separate himself from that?
Well, he's trying, and Biden was up in southwestern Pennsylvania earlier this week saying that he is not a socialist who wants to have the type of recklessness in the cities. And what's fascinating about this Kenosha story, John, is to be candid, I mean, it's not a major metropolis. I mean, this is really a relatable type of community in terms of suburban America and its diversity and where it stands on a host of different other indicators. And so what's really remarkable here is I would also note that the president also needs to come out and make sure that suburban voters don't feel that he's fanning the flames of division in the country. And that's really what the Democrats have been trying to push for. Regardless, any crosstab poll indicates that the economy still outranks even the pandemic in terms of what is most weighing heavily on voters' minds.
And to that point, Kevin, where are we in terms of President Trump's involvement on a second round of fiscal support?
Well, the president has said that he wants to utilize executive orders in terms of providing additional relief. You're seeing some of that this week as it relates to rent assistance and forgiveness and the like. But the bottom line is that there's still, again, I feel like this is a running joke between us, Lisa, at this point. There still is no deal.
Kevin Cirilli, down in Washington, D.C. Kevin, great to catch up with you, sir. Senate Minority Leader Chuck Schumer out on the wires right now. This headline crossing a Bloomberg. The GOP stimulus proposal is completely inadequate. Tom Keene, do you think we have to get our hands around the potential, the possibility that maybe there is no fiscal deal before this election?
Oh, yeah. Well, on your sabbatical, shot glass, on your sabbatical, John, that's clearly been the tone. There's no question about it. And what I would suggest, John, that's deteriorated while you were gallivanting around Europe is Lisa and I have really seen a deterioration in New York. There's just no question about it. And we've heard this from viewers and listeners across the nation. And going into the jobs report with no hope of a stimulus, to me, John, the immediacy here is very much heightened over the last 4 weeks.
Do you think this shot glass is too big?
No, it's the same as mine.
I'm doing the same thing.
I'm
literally the same thing.
I'm probably going to need this, aren't I, for the next couple of hours?
1000%. Cheers.
Maybe for the next several years.
Cheers to John. John, we're so happy for you. Cheers.
Just for the sabbatical.
Me pretending I'm happy. Good to see you guys. In the markets right now, we shape up as follows for equities on the S&P 500. Equity futures slightly negative, about an hour away from initial jobless claims in America. Then tomorrow, the payrolls report in America. Live on Bloomberg TV and radio, this is Bloomberg Surveillance. Live on Bloomberg TV and radio. For our audience worldwide, this is Bloomberg Surveillance, 2 hours away from the opening bell in New York City. Here's the price action shaping up this Thursday morning, with equity futures down around about 0.5%. The S&P 500 still on course for a sixth straight week of gains. In the bond market, your 10-year maturity 0.65%. And Tom Keene, as we count down to the economic data in America, the dollar stronger against the euro. Euro dollar just north of 118, but coming in 0.4%.
It's got that pre-Labor Day feel, John. I mean, this is really wacko, folks, with a later Labor Day here. And really, some would say the year, the season doesn't start until September 14th, next Monday. But with that said, I mean, you know, it is an odd time and an illiquid time time. We need a briefing, and particularly a briefing on our economics and dynamics, John and Lisa, and that is Louis Alexander with Nomura writing very thoughtful, broader notes. He is with Nomura Securities, our chief U.S. economist. Louis Alexander, let me cut to the market economics of the moment. What should we expect today from claims? What should we expect tomorrow in this odd jobs report?
Well, in some ways, the surprising thing is these numbers have held up remarkably well, given that it's clear that activity has slowed in August. We've also kind of gone off the fiscal cliff, so we're not getting that kind of support. Our expectations for tomorrow is we're going to get 1.35 million in new jobs. That's 1.25 in private and a decent gain in the government, in large part because of the census worker. To be perfectly honest, given how much the economy is stalled, it's surprising that things seem to be doing that well, but that is the indications we're getting.
I mean, within the jobs report, you move right on to the American economy. Do you just model in, without stimulus, a slowdown in Q4 and then into Q1? And are we beginning to see that when we see headlines across the Bloomberg of 4,000 jobs here, 19,000 jobs there?
Look, I think if we don't get another round of stimulus, the risks are very high that we get a slowdown. You've already seen a decline in unemployment compensation so far in August that's on the order of 5% of income. That's a very big shock. And the surprising thing is it hasn't really shown up in the spending data yet, so we have data that lags by only a couple weeks with actual credit card and debit card spending. Those numbers have not rolled over yet, and that's a bit of a surprise. I think if we go into the end of September, into October without getting a deal, I think that's going to be a different story.
Lou, at the moment, though, where are you more constructive? What makes you a little bit more optimistic? When the economic data, the story, says things are okay, things could be okay?
So the biggest, I think, reason to be optimistic is the fact that we've had this summer surge in COVID. It seems to have been contained without going back into full lockdown. So the fact that we kind of reached a peak and then backed off it with relatively contained things is encouraging, number one. Number two, the fact that economic activity has continued to expand. So, for example, if you look at things like the open table bookings for restaurants, those have continued to rise. It suggests that our ability to live with COVID is much better than it was in March and April. And so I think that that is encouraging. But there's a question of how far does that take you, number one, if we don't get further fiscal support, and number two, if we kind of get into the fall and get into the sort of true second wave that people are worried about, that sort of coincidence with flu and all of those problems. So look, there are big risks going forward, but I think you have to interpret the way it's played out over the summer is in some ways better than you would have expected given what we had in March and April.
Well, Lou, when you make some forecasts, you've got to make some assumptions. So let's just make one assumption right now, just for the sake of this conversation. Let's assume they don't make a deal down in Washington, D.C. What would that mean for your forecast going into 21?
So currently we have modest growth. We have, the third quarter is already, because of the bounce back, going to be very, very strong. The question is really what happens after that. Our current forecast has modest growth in Q4. If we don't get a fiscal deal, we'll have an outright decline.
Louis, will we ever get back to the 3.5% unemployment rate of last year?
Yes, just in the sense of forever is a long time. I think it's fair to say that the labor market has actually been stronger than most of us thought it would be if you went back to the way we thought this was going to play out in April. But it's going to depend on, number one, getting the virus no longer being a threat. I don't think we have a shot at getting back there until we, through a vaccine or herd immunity or some combination of those, it's no longer a factor. Yeah. I think it's also going to take a long period of recovery, and the fiscal support and how that gets managed is one of the important risks for that going forward.
I ask that because there was a survey coming out of the Bureau of Labor Statistics that showed a much slower expected rate of growth in the United States over the next decade than in the prior decade. We are seeing structural cuts across the board at companies both doing well, I'm thinking of Salesforce.com, as well as those not. I'm thinking airlines with nearly 500,000 job losses probably this year. How does this factor into getting an unemployment rate back down to where we were last year? What jobs will fill the void?
So one of the big questions that's hard is, what is the world going to look like after COVID is no longer a threat? So what is the outlook for industries like airlines, travel, restaurants, those kinds of things once we've sort of put that aside? It may well be the case that, for example, there isn't as much business travel because we've all learned that we can do this stuff remotely more effectively. I think ultimately that will mean it will take longer to reallocate those jobs. But history would tell you that ultimately the economy adjusts, we find new ways of doing things, and ultimately the economy kind of gets back to some notion of full employment, even if it looks very different. Those sorts of structural changes take time. That's part of the reason why it will take longer to get back there, but I don't think it means we won't ever get back there.
Jonathan Farrell, Lisa Bramwitz, Tom Keene with us. Lou Alexander, we welcome all of you on Bloomberg Radio, Bloomberg Television, a simulcast. Lou Alexander, I've got to go to technology and your really thoughtful excellence on its effect on us over the years. How has your view on our digital dominance? How has your view on technology changed since March?
Look, I think the most interesting thing is businesses have learned that they can do things more efficiently remotely than I think they ever thought possible. And in some ways, the reaction you've seen to extreme social distancing and whatnot, I think is going to affect things going forward. I do think it means that that divide we've talked about in the past, where if you can use information technology to do your job effectively, this is a good world for you because that technology is just getting better and better, versus if it's not something that's central to you, then it's a problem. Look, I think those sorts of trends have been heightened by this. And I think businesses have learned things that they didn't know before, and that's going to have permanent effects. Now, look, ultimately, that broader trend of information technology is just the biggest thing in our lives and is likely to continue to be for the foreseeable future. That was true before COVID. It's going to continue to be true. But in some sense, we've kind of made a jump on this. And I think it is going to be a challenge for people whose jobs are in some sense not tied to that directly. And that is going to be an increasing challenge for them.
How does that fold into our wage challenge? Now, tomorrow with this odd jobs report, we'll look at one data point. But if you look out 60 data points, 5 years of wage data, do you just suggest with technology, compressed wages?
So I think you're going to continue to see pressures that will boost the wages of people who work with technology, because that world there, in some sense, the things that help them do their job will just get better and better, versus the people who don't are going to face bigger challenges. And one of the biggest challenges for the government over the next few years is going to be, how do you deal with that inequality? And I think obviously that's something that Biden is talking a lot about. But that is going to be a big challenge going forward. I don't think it means overall wages are down, and one of the complications with the number we're going to get tomorrow is it's a very odd number. It's just an average for the economy as a whole, and it's in these times when the sectoral shocks are very large, it gets pushed around by compositional shifts. So it oddly went up when unemployment crashed because the people who lost their jobs were relatively low-wage workers. It's come back relatively strong as some of those people have been rehired. You have to sort of look through those aspects of the changes. It's a very odd statistic now.
Hey, Lou, great to catch up, as always. Lewis Alexander there of Nomura Securities as we count you down to the payrolls report tomorrow morning. Looking at the spread once again, Tom, between the high and low estimate on Wall Street right now. Wide going into tomorrow. The high 2.4 million, the low negative 100K, the median 1.35 million. Tom, the unknown, once again, going into payrolls.
Well, that's where Lou Alexander was, but there's all these little data things that just really have my attention. And I know it's illiquid, John, and in America, John, we have Labor Day. That will be the next Monday. And, John, just to notice, oil, American oil, John, we call that West Texas Intermediate. American oil, John, really making an effort to get back to a 39 handle. They're these little tea leaves of economic contraction that we have to watch.
You're not subtle, are you? Tom, I've been gone a couple of weeks. Lisa Bravitz, he's making out I've been gone forever, that I've never visited America before, that I just don't know.
Literally, he pretended that I was from the Adirondacks for about 3 weeks after I went there for 1 week. So you got some more time to go. Stick with it. You're going to be fine. I will say this. My question with some of the labor data we're going to be getting, it has been a sort of leading indicator or at least a real-time indicator that people have considered. I'm wondering if it's losing that ability as we watch an economy changing in real time and very much responding to fiscal support or lack thereof, John.
Lisa, we've got to learn to live with it. Tom, you know, I've been traveling and I've got skin in the game now, and I understand what it's like to see the New York-London corridor just shut down. It's ridiculous. It's absolutely ridiculous right now, and it's because we can't sort testing out in the UK or in the United States in a sufficient way to get people traveling again. What do the airlines need? Not stimulus, not bailouts, Tom. They need testing so people can travel again.
Right, absolutely. The same thing here in America, John. It's extraordinary, and it'll be in that labor report tomorrow.
The payrolls report just around the corner from New York and London. This is Bloomberg Surveillance with equity futures down 0.4%. This is Bloomberg.
With the First One News, I'm Ritika Gupta. The CDC says states should prepare for a coronavirus vaccine to be ready just a couple of days before the presidential election. That's an aggressive goal that would depend on shots being tested and reviewed by then. President Trump has previously said he thinks the vaccine will be ready by Election Day. That claim has raised questions about political interference in vaccine reviews. President Trump is once again denouncing voting by mail. He told a crowd in North Carolina that if they vote by mail, they should also go to the polls and try to vote a second time. He said that's a way to determine whether their mail ballots were actually counted. That could lead to voters violating the law if they try to cast a second ballot. And President Trump has ordered a review of federal funding for what he calls anarchist cities. It's aimed specifically at New York, Seattle, Washington, D.C., and Portland, Oregon. All are Democratic-run cities that have had protests demanding racial justice. Any move to restrict federal funds would probably result in a court case. More job cuts on the way at e-cigarette maker Juul. The company is thinking about exiting more European and Asian markets. A health crisis surrounding vaping sent Juul into a tailspin last year. The once high-flying company has already laid off about 40% of its workforce and halted its global expansion. No word on how many jobs will be cut this time. And in baseball, Hall of Fame pitcher Tom Seaver has died. Seaver turned the New York Mets from lovable losers to World Series champions in 1969. He's one of the only two pitchers to record more than 300 wins. 3,000 strikeouts and an earned run average of less than 3.0. Global news 24 hours a day, on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
we are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with 17,000 additional jobs added in terms of net revision.
We still got 1.8 million, with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed. But the good news is that it is continuing. And it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
The rapidity with which we are moving relates more to technological advances in how you can make a vaccine even before you start testing it. That makes me confident that we are going to do everything we can to determine safety.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
We know it's a pandemic, and we want to be very responsible for pricing. We plan to underprice this vaccine for its value, especially in the pandemic phase.
The economy is healing, it's getting better, it's starting to become self-sustaining, but there's enough uncertainty that I think one more bill probably makes sense.
Steve Sheffer on that, a Federated Hermes portfolio manager on the latest fiscal effort down in Washington, D.C. For the market's been doing okay, better than okay over the last 5-6 months. A rally, a constant rally that's showing no signs of ending. This morning, we are down by 13 points, off by 0.4% on the S&P 500. In the bond market, stable on a 10-year Treasury, 0.65%. Tom Keene for all the fanfare about Chairman Powell in the past week. Just a complete 180 in the bond market at the long end. Not just the 10-year, but on the 30-year as well.
Yeah, and the correlations as well, John. I mean, it's correlated up to push against the reflation belief coming out of Jackson Hole, and maybe it's August, maybe it's the economy, maybe it's this, maybe it's that, but you're absolutely right. And with the 30-year bond, John, we quote the 4 digits on Bloomberg surveillance.
Did we?
1.37% on the 30-year bond. Right now, Lisa Bramowitz, John Farrow, and I simulcast Bloomberg Radio, Bloomberg Television. We welcome all of you coast to coast across America that is clearly and has always been over-retailed. We are facing that now with a vengeance. Steve Sadoff joins us, of course, MasterCard's senior advisor, and so much part of the merchandising of his Saks Fifth Avenue for many, many a year. Steve Sadoff, what have you gleaned in the last number of weeks about retail America, from Walmart in the big boxes up to the empty luxury stores on Madison Avenue? What's the new for you?
Well, I think, Tom, the MasterCard data would tell you on the recovery insights that you're starting to see a recovery. If you go to the depths of the pandemic, in March, we were looking at a minus 14% in the total consumer spending. It's improved dramatically over the number of months, but the rate of growth has been slowing. So we went from that minus 14 to now we're at a low single-digit level that has stayed at that low single-digit level for the last couple of months. If you look at retail has been a little bit in the middle of the epicenter of that. And what's happened is that the retail has not died, it's shifted. So you've seen a doubling in the amount of internet sales. basically. And you've seen that the retailers who have been omni-channel, who have been contactless, who have been home-related, who have been the ones that have been open during the pandemic have been the winners. Those are the Home Depots, the Lowe's, the Walmarts, the Targets. But the reality is you're starting to see green shoots in other retail. Travel and entertainment, which had been dead in the water, over the last several months, you're starting to see an improvement in travel and entertainment. And that, to me, is what's interesting coming out of the recovery insights. In Europe, you've seen some recovery in travel and entertainment. You've also seen people staying closer to home, stay vacations. Gasoline is up. You're seeing lodging starting to improve. So it's not just about retail in terms of the home decorating, the hardware. Now you're seeing it evolving so that the restaurant trends are improving. Clearly, Tom, your comment about the number of stores, you're going to see a massive number of losers coming out of, you've seen it in terms of the number of bankruptcies on the retail sector.
Steve, how are we going to clear that market if there are, quote, a massive number of losers? How in retail do you move them aside so you can move on?
Well, look, I think that there's going to be a repurposing in malls as an example. You already see it. So a number of the anchors are either closing or going bankrupt. You're going to see them repurposed into either healthcare, education, fitness. This is the normal evolution of retail. But remember, overall retail coming into the pandemic was about plus 4%. I'm not going to be doing any forecasting, but even as we sit today, we're in that low single-digit decline. Internet, omni-channel is going to continue to grow. We have too many stores in the United States. Everybody knows it's probably 3 times per capita than what you see in Europe. So we've got to see a closing of the number of stores. It's a reset that's going on with the landlords. The rents are coming down, and you're going to see you go to Madison Avenue, you go there all the time. The vacancy rate is 20, 30% or more. You're going to have to see a reset relative to the store base.
So, Steve, you have seen people shift away from spending money in the brick and mortar stores. They are spending online. They have supported this economy. They continue to do so. Can they afford the purchases that they're making, that they're charging on their MasterCards?
Oh, no question. I mean, first of all, you see a luxury consumer that's coming back. You saw Macy's reported yesterday that their high-end luxury businesses are doing well. Saks made comments that they were positive in their overall trend. The luxury consumer has not been traveling internationally, as an example, so have the spending capacity. At the lower end of the market, the government support programs over since the pandemic started has supported spending. So I think that clearly there's a question right now. There's a bifurcation between Wall Street and Main Street, and that the consumer is not growing at the rate that we're seeing the stock market growing. On the other hand, there is a wherewithal to spend, and the consumer has been spending largely on nesting, home, basics for the first several months. But now, as you look at this travel entertainment data, you see it in Europe, you see it in the U.S., that the consumer and restaurant spending improving, even department stores, which had been in that minus 50%, 60% numbers, have shown improvement over the last couple of months. So as the economy's opening, you're starting to see that spending coming back.
Steve, 45 seconds on the clock. Just a final question from me, not just about where they're spending and how much they're spending. Let's talk about how they're spending. What can you guys do to get contactless payments up in America?
Oh, I think that it's what the consumer needs and wants, and the progressive retailers, and I'm looking at the Walmarts, the Targets, the Home Depots, the big boxes have made the investments to be able, they have the scale to be able to do the contactless spending. The MasterCards of the world are providing some of the capabilities to do it. Others are also. And that's going to be the future longer term. Smaller businesses I worry about because they need to be able to make the investments. And right now they're strapped.
Yeah. And it's expensive to install those machines sometimes. Steve, great to catch up. Former Saks CEO and MasterCard Senior Advisor. Tom, some work in America needs to be done on that front. I remember, and it's a story I tell often, and I've told on this program before, going into a Dwayne Reed maybe 5 years ago with a contactless card and tapping it up on the payment screen, and the individual behind the counter looked at me like I was a magician. They'd never seen a contactless payment used with a credit card before, and I think compared to Europe, that's where US retail needs some work. But as Steve pointed out, and Tom, and this is critical, for the small business, it's expensive to move in that direction. But in an environment like this, it's got to happen.
Well, you've got to believe it's going to be forced here. If we get the Apple report we had the other day of 5G finally coming in here late this year and into next year, maybe that will be the catalyst to do that. John, we're coming up here on claims 35 minutes away. And John, I've got to let you know there will be a SpaceX launch. We're looking for that later in the hour after claims. Steeled at Cape Canaveral to move 60 satellites into orbit.
I'm looking forward to it, Tom. Coming up next on this program, Seema Shah, Principal Global Investors Chief Strategist from New York and London. This is Bloomberg Surveillance.
Me gustaría decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos. Y estábamos viviendo en dos casas, en unas 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas. Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración. Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esta enfermedad yo perdí todo, perdí mi trabajo. Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Europe does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
There's honestly much more rationality happening in the equity market when we look beneath the surface.
There's all this comfort globally around debt levels, and at some point it'll be too much.
The Fed needs help, the Fed needs a partner, and the partner is fiscal policy.
Fiscal stimulus would obviously be a nice to have. I don't think it's a need to have.
The only reason not to be pragmatic is fear of instability, which doesn't seem to be in the cards.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene, a simulcast on Bloomberg Radio, Bloomberg Television. We welcome all of you. Lisa Abramowitz and I in New York, and Mr. Farrow in London as well. John, we've got claims coming up in 30 minutes, a jobs report tomorrow. We're going to do a SpaceX launch supposedly in 45 minutes. And you know what I need from you? I missed you so much. I need a TOTS update. They are dealing at Tottenham. There's no question about it. With what's going on now, John, have the TOTS lifted themselves finally up into the top four?
Well, for the Premier League, Tom, I think there's a bigger issue for more than just the TOTS. For the big clubs, what we've experimented with here in the United Kingdom, Tom, is having the fans back, just a few, and trying to work out at what capacity we can push that story. And maybe as the league starts again in the next couple of weeks, it's something we can build on through the season.
And I will say this, and I'm not kidding, folks, nobody's done it better. Back to sports in the Premier League. They're a real lesson for all the American sports struggling this. John, on a much more serious note, claims today, and whether it's 1 million or 900,000, it's a grim number.
It's a grim number, and it speaks to the economic pain. Perspective, I think, is really important, Tom, and that's what I got, just taking a few weeks off, some real perspective. Biggest news for me in the last couple of weeks, not an equity market that broke new record highs. It was the fact that you saw more layoffs coming from the airlines. It was the fact that for some credit card companies, the likes of Capital One, putting new limits on some of those consumer credit cards. That's the reality for a lot of people, Tom. It's not just the fear of losing your job right now. It's the fear of getting sick as well. It's two pressures piling on top of the average American, the average consumer around the world. And the bubble that we're in right now, talking about financial markets, not many people have got direct skin in that game. They don't feel those record highs. They feel the threat of losing their job. They feel the threat, the risk of getting ill. And that's what's dominated the psychology of Americans and people worldwide for the last 6 months.
And just through August, it's been extraordinary. And Lisa Abramowitz, as we look at these two Americas and what we'll see here at Bloomberg within our economics, our finance, our investment, we can't forget the tensions we see in Portland and Kenosha, where the vice president visits today.
Yeah, there's been this incredible dissonance, as John is talking about, and you've been talking about, with the growing inequality, the two markets, the idea that the stock market is not the economy as it hits record highs. We see the souring of the labor market. We see the rising of tensions politically, socially, et cetera. Today, you're seeing a little bit of a dip in markets, and some people could say maybe stocks are getting rational. Maybe they're looking at the actual reality on the ground, but it's actually the opposite. If you take a look, it's really fascinating. You're seeing the NASDAQ underperform. You're seeing a reflation trade taking hold. You're seeing the high flyers like Tesla and Zoom sell off, whereas others are actually seeing gains. Yes, John Farrow.
0.4% on S&P 500 futures, and you can sense reality.
No, my point is, at least it's not to the moon.
15 points.
Right, no, look, Tesla. Tesla's a perfect example. Who knew it could fall? It's falling today. It fell yesterday. Is this some sort of rationality coming back to markets with some sort of check on that? Unclear. That's my point, John.
I need to see a little bit more than that, don't you, Tom? Than a couple of days of a correction on Tesla and a 15-point move in S&P 500 futures. Lisa, I take your point. But at the moment, I think we're finding many ways of justifying the unjustifiable. I'm sorry, but when stock splits start to become bullish and people are comfortable with that idea because they believe that other people believe that, so therefore they're going to play that trade, that's when things have got absolutely crazy.
And just important, John, the anticipation of further stock splits as all of our other CFO and CEO sees the impact of that. What I would note off the Bloomberg data screen, John, and I want you to jump in here quickly, John, with a data check, is the idea of DXY finally back printing 93. I'm not talking strong dollar with the boldness of Lisa Abramowitz, but John, nevertheless, weak dollar certitude has drifted away in the last number of days.
Hey, Tom, for me, get the board up. Let's have a look at it. For our listeners on radio, for our audience on TV, equity futures are having a move lower by 14 points. So the S&P, we're down 0.4%. But I'm with you, Tom. Right now, foreign exchange, euro-dollar, 118. The last 24 hours has been really, really important. We know what the line in the sand is for the ECB. It's 120. They don't want euro-dollar there. But here's the question for the euro bulls and why the euro bulls still feel comfortable, Tom. They feel comfortable because they don't know how the ECB follows it up. Words are one thing, but you need to have a credible threat of doing something, some follow-through. And for the Euro bulls right now, they're comfortable with a bullish view on a single currency because they think this is just words, empty words, and nothing to follow it up with.
Well, we're comfortable. We're going to give you the best coverage on claims here in 25 minutes. Make it. Michael McKee will join us. Right now, though, Seema Shah, and this is an important conversation with Principal Global Investors, their chief strategist, with a real focus on the equity market. Seema, writing this morning for Principal Global, thinking about this market, what is the key distinction of these equity markets?
Hi, thanks for having me on. Well, as you said before, this equity market is still riding really high. It's been driven by a couple of factors. There are some things that really do concern me about it, and that's in the last few days, this real emphasis on the vaccine. We know, of course, we've heard the news that November is a likely date. But the question is, how realistic is that? How effective is the vaccine going to be? And how much are people going to really adapt it? And if it isn't as good as we're expecting, then that support mechanism really falls away from the market. And then I think that we're looking at some potential disappointment, which could be very dangerous for investors who are looking out here.
What does dangerous mean? I mean, how big of a fall are we talking?
Well, okay, so let's break it down. So when we look back to what has a rally up till now been driven by, before the news around the vaccine, it's been driven by stimulus. It's been driven by the release of pent-up demand. Now, that pent-up demand, we've already had the easy gains, but now people want to feel like they are comfortable going out. News around the vaccine, I think one of the reasons we're seeing some of the more cyclical stocks performing better is this hope that people can go about their normal business. If we don't have that, then the rally that we're expecting, especially in the economy through Q4, starts to fall away. And then, as we know, the equity market already looks very frothy, so we're looking at potential falls at that point.
Seema, I sound like a broken record. I've been talking about this a lot. The fact that people back in August, early August, were saying if we don't get an additional round of fiscal support, we are going to see a reality check in markets. It is September 3rd. There is no fiscal support on the docket. In fact, it is unclear whether they will have one even to thinking about next week. Why are equity markets not responding?
Yeah, it's a great question. It's something that our clients keep asking us. And I think the thing is that, look, we actually have economic data which has surprised on the upside. So the economy has been stronger than we anticipated. And I think the one thing that many, many people have done over the last few months is I think we catastrophized a bit too much. And we underestimated how much human nature just wants to go back to normal. So look, we can't go completely back to normal unless we have that vaccine, but there is something there. So the economic recovery has been stronger. And I think because of that, markets are starting to think, do we really need this fiscal stimulus package?
Seema, when corporations, big corporations, publicly traded corporations, when they cut 1%, 2%, even 4% of people, what does that do down the income statement 12 months out?
Right, and again, the unemployment issue is so significant, and we keep hearing news. I mean, in London, there are continuous news flow of big companies making significant redundancies. These people really need to have those fiscal packages. So I buy into the idea that the market is starting to think it's less important than maybe it was. But to me, this is really what's going to sustain the recovery going forward if we have that fiscal stimulus package. If we don't, then those people who are going to be facing job losses or even facing the risk of job losses, they're the ones that are going to struggle, and there will be an impact further down the line.
Seema, did you ever think that you could make a decision, if you had enough money, that is, a decision to either own a company like Apple or the whole FTSE 100 and have $500 billion to spare? Did you ever anticipate a situation like that?
No, and I don't think anyone could have foreseen the movement that we've had. At the same time, though, look, the trend in big tech is not new, right? We have seen it drive markets since the GFC. What happened over here, of course, is it's accelerated, so it's been magnified. We have some genuine belief in the strength of big tech and the belief that it could continue to perform well, to produce good results. But I just don't think that having the rally so narrow is a healthy thing. And I think investors really need to be aware that unless we get a full economic recovery and we get a vaccine, that until we have that, you just don't have a sufficiently strong recovery to keep it going, that you need to have enough confidence.
Seema, great to catch up. Good to catch up as always. Seema Shah there of Principal Global Investors. Tom, the market cap of Apple, $2.247 trillion US dollars. The market cap of the FTSE 100 in sterling, 1.63 trillion. Just think about that. Just have a little think about that, Tom. That's where we're at right now in 2020, that you can have a single company in America bigger than the entire equity market in one of the largest economies in the world.
There are any number of ways to look at this, John, but I'm going to give you one anecdotal way. On Madison Avenue, there's a bunch of fancy stores. Most of them are empty. Some of them have a few people in them, with an emphasis on the word few. John, there's a line out the Apple door waiting to get in. To me, it's
I'm with you.
It's one big revenue play. To me, it's just a massive guesstimate of rising revenue.
That second quarter, Tom, was truly historic. I don't think we'll ever see anything like it ever again. To have an economy that was essentially shut down and see that handful of companies still mint money.
Yeah.
That's why they are where they are. I get that. But the story, I think, for me, is just the concentration, and for others as well,
right.
I know. The concentration, the crowd, it's just a handful of names.
It's not the story for me. The story for me is iPhones are breaking at home in anticipation of 5G.
Deliberately.
Last night, Vet Bill's iPhone, he's got the little cheaper one, Vet Bill's iPhone broke.
Aww. The dog has got a phone.
Dropped a bone
Lisa,
on
how have
it.
you dealt with this? How have you dealt with this, Lisa, for the last several weeks alone?
Well, honestly, I will say Vet Bill has had a soft spot in me. So you know what? If Vet Bill wants a phone, he can phone Tom and say, you know what? You need to walk me. And that's what happened yesterday, I hear.
You got that right.
What has he done to you, honestly, in the market this morning? Good morning to you all. For New York, from London, good afternoon. In your market, this is how we shape up. Down 16 on the S&P 500, negative almost 0.5%. Lisa can sense a reality check. Can you? This is Bloomberg.
With the First Word News, I'm Rishika Gupta. The timing on this may raise some eyebrows. The CDC has told states that a coronavirus vaccine could be ready by November the 1st. That's just 2 days before the presidential election, and it's an aggressive goal that would depend on shots being tested and reviewed by then. President Trump's political future hinges on a response to the virus that has killed almost 185,000 Americans. New polls show Joe Biden leading President Trump in 3 swing states that the president won 4 years ago. According to Fox News, Biden has the edge in Wisconsin, North Carolina, and Arizona. In all 3 states, Biden shows strength amongst women and suburban voters. Secretary of State Mike Pompeo has imposed new limits on Chinese diplomats in the U.S. The curbs have to do with visits to college campuses, meetings with local officials, and cultural events. The U.S. is taking the steps to match Chinese limits on American diplomats. And China's moving to counter Trump administration restrictions on semiconductors. Beijing plans a sweeping new set of policies to build up the domestic chip industry over the next 5 years. Bloomberg has learned that the Chinese government's putting the same kind of priority on the effort that it gave to building its atomic capability. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
How has it shaped the leader you've become in dealing with this pandemic?
What I find to be incredibly valuable in a situation like this is having that breadth of experience leading large organizations.
We've put ourselves on the front foot again by adapting all the company, by resizing, by adjusting production rates, by adapting the supply chain as well to this new difficult environment.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We've seen those entry-level jobs go away, those lower-wage jobs go away, and that's a potential avenue for a permanent structural scarring on the economy.
Andrew Hollenhorst there of Citigroup, 13 minutes away from initial jobless claims in America. 24 hours after that, we will have the payrolls report in the United States of America. Here's your price action this morning. This Thursday morning, we shape up as follows. Stateside, equity futures declining on the S&P 500, down 0.5%. Awake to the tape, we're down 19. In the bond market, 0.65% is your yield on a US 10-year. Big turnaround in the last week or so, through much of this week anyway. And euro dollar took a little peek at 120 and got a slap off the chief economist at the ECB, back down to 118.12. That's some dollar strength against the bulk of G10 this morning. Euro dollar coming in 1/3 of 1%. Tom, we talked a lot about that handful of companies doing fantastically well through 2020. The airlines have bounced back a little bit. American Airlines is still down 54% year to date. It's still a struggle.
And you see it as an immediate struggle as they adapt and adjust to changes in government funding as well. We heard Steve Sadoff, ex-Saks, talk about retail coming back, travel coming back slowly. Savani Sith at Raymond James totally agrees with what Mr. Sadoff said. And with that, she has optimism on selected airlines. She joins us this morning, of course, head of equity research at Raymond James. Savani, I'm going to start with Southwest Airlines. There's always been an affiliation there with Raymond James. Frame the enthusiasm you have for Love.
It's like they're well positioned. There's no mincing words. The aviation industry is very badly hurt by this current pandemic. Unlike any other downturn we've seen, there's just a lack of demand here. But there are airlines that are better positioned to and able to survive and come out of this stronger. And Southwest is one of them. One of their competitors described them as a universe of their own when it comes to financing and liquidity. And they're able to do unsecured financing at very good low rates here, even in this kind of a downturn. So they're well positioned, and they are well positioned because they have more leisure and more specifically more domestic exposure than some of their bigger competitors. So I think they're seeing the pain as much as everybody else, but they'll be able to come out of this faster and stronger, I think.
Tom, you have a way with words. talk about the enthusiasm you have for love. I mean, it could have gone in so many directions. I mean, really. But it was well said. Savanthi, I will ask you, though, how much is Southwest, or Love, as Tom talks about it, insulated from some of the broader cross-currents here because of business travel, the idea that that may not come back, and that has supported the biggest, strongest, most established airlines?
You know, I think it's a misnomer that Southwest is not a very business airline. I think Southwest drives about 40% of their revenue from business travelers, as opposed to maybe American, Delta, and United that drive 50% of their revenues. Now, Southwest doesn't have as much premium fares because they don't have a first-class product, but they rely on the business passenger as well. So, you know, they're going to need the business passenger to come back, but they are a leisure, low-cost airline, so they should be able to bounce back faster than their competitors, and especially they don't have a lot of international, and international is going to take a while as well.
And John, it's all relative. Love down 33%-ish versus the American Airlines statistic you had earlier.
The transatlantic route, that's the problem, Tom. And Savanthi, I just wonder, what can we do to get that corridor, that money-making corridor for these big transatlantic global airlines reopen again between New York and London so we can get things going, get things moving?
Yeah, I mean, obviously the therapeutic or vaccine would be the best for demand in general, but there is kind of progress being made on the testing front, where if we can get enough testing capacity, and especially rapid testing capacity, we might be able to, you know, get countries comfortable with opening up borders and also reducing the quarantine times. You know, if you do testing within kind of 5 days of the quarantine and it comes out negative, maybe the countries can get comfortable with letting people then go out and about, and that won't be as much of a negative impact in considering travel. So I think that's the best alternative here in the near term until we get a vaccine or a therapeutic.
And you're seeing that in some Caribbean islands. I checked for you, Tom. Not just the Caribbean islands, but also Bermuda. You get the test before you go. They test you when you arrive. It means you don't have to quarantine.
Oh,
Savanthi, great to catch up. Savanthi Sith there of Raymond James. I haven't done it, Lisa. I was just thinking about doing it. In about 7 minutes' time, we've got some data. Shall we talk about that? The economic data, 7-8 minutes away. Michael McKee dropping by to give you a little preview of what to expect for that. Mike, great to catch up with you, sir. What's the focus for 7-8 minutes away?
Well, what's important for this week, John, obviously everybody keeping a very close eye on jobless claims, but the number we're going to get, the headline number, is not going to be comparable with previous headline numbers because the Labor Department has changed the way they do seasonal adjustment. Seasonal adjustment, obviously, and I think we have a chart that shows this, takes into account the idea that there are months that are extremely lumpy. You can see the big spikes there where retail employees are let go after Christmas time, and then you can see another spike in July that accounts for the closing of auto plants while they retool, and you can see the blue line takes that out. That's the seasonally adjusted, but the seasonal adjustment was based on a percentage of the number of non-seasonally adjusted claims. Now it's just going to be a number added in. So we're probably going to get a lower number, a significantly lower number than we had last week, but it won't be meaningful. We'll take a look at the unadjusted numbers first.
And for those of you on Bloomberg Radio looking at that chart, all I can say is it looks like Michael McKee's and my tuition payments is the way they go through the school season. Michael McKee, why'd they do this? I mean, what's the why here? The numbers seem to be good. It's something we believe in. What's the so what of making this change?
Yeah, I used that chart up till the beginning of March because after that, when we got into the middle of March, we saw this gigantic spike, and a percentage of a much bigger number is going to be a much bigger number than it otherwise would be. So what they didn't want to do is have the seasonals distorted from here on out. They're going to try to keep them much closer to where they would be historically because eventually this number is going to fade.
Mike, a month ago, 24 hours out from payrolls, we were talking about the prospect of a negative print. What happened a month ago, and what does it mean for the numbers that come out tomorrow?
Well, when we were looking at the survey week, we had an elevated number of claims. That's when claims bounced back up again. And so people are thinking that could influence the possibility of a negative print for Friday, although that's generally come out of the market with other statistics that we've seen since. There's a feeling that we're going to get a positive gain, but slower than it had been, about 1.3 million jobs. There are still some numbers to come. We'll talk about them on your show later, John. The ISM numbers numbers. The employment number for manufacturing was still bad, even though the headline number was up. We'll see what the non-manufacturing, the services numbers show. And, of course, we had that disappointing ADP number yesterday.
Yeah. We've got about 30 seconds left, Mike. Do you want to promo that other show that comes up in about 35 minutes' time?
It's The Open. It's one of the best shows on
It
Bloomberg.
is. Oh, it is. From London.
Thank you, Mike.
Live from
Appreciate
London.
that.
Oh, my.
Live from London. I'm looking forward to it. Tom's not jealous at all. Michael, we'll see you in just a moment, sir. The estimate for claims in America, 950,000 in the previous week, a little north of 1 million. The conversation coming up next. Michael McKee will break down the numbers. Then the reaction right here on Bloomberg with Michael Cloherty of UBS. This is Bloomberg Surveillance.
Nós aqui do Brasil, eles querem proibir nós na mineração, produzir a mineração, né? E vem as empresas, grande empresa que nós aqui do Brasil não tem condição de trabalhar nela, eles pegam, tiram o minério e levam quando eles querem. E nós no Brasil aqui, que mora aqui no Brasil, nascemos no Brasil, e fica sem nossa produção.
Sou pai de família, né? Eu tenho filhos estudando e eu não posso me acovardar ao ponto, né, de deixar a minha filha passando necessidade ou a minha esposa passando necessidade. Então a gente se precaver, vai fazer o quê? A gente vai esconder, a gente vai correr deles, né, enquanto tiver perna. Agora desistir nunca, a gente vai continuar trabalhando porque eu preciso sobreviver, eu preciso dar o sustento para minha família.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I do double down on helping other Black founders, whether it's fundraising, hiring, growth, product, whatever it is that they need.
Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Seconds away from jobless claims in America, live on Bloomberg TV and radio. This is Bloomberg Surveillance alongside Tom Keane and Lisa Abramitz. I'm Jonathan Ferro. With equity futures down 17 on the S&P 500, we are negative around about 0.4%. The economic data dropping across the Bloomberg. Here is Bloomberg's Michael McKee.
Well, John, we're just getting the numbers here for the last week in terms of jobless claims. And remember, train your mind to think of this differently. We're going to look at the non-seasonally adjusted claims. They are 833,352. That is up by about 8,000 over the prior week. The seasonally adjusted claims fall to 881,000 from 1,011,000. But remember, they changed the seasonal adjusted factors, so those 2 weeks are not comparable. So the number you want to look at, 833,352, does show that we saw more jobless claims filed last week. Pandemic unemployment assistance for freelancers and for self-employed, 759,482. That is up from 607,808. So a big jump in that number, and those are always unadjusted. So that is not particularly good news. And here, total people receiving benefits, this is not good news. It's 2 weeks ago, of course. This is the week that the jobs survey was taken. The total number of people receiving benefits, 29,224,000. That's up almost 2 million, 27,028 from the prior week. So in the week we took the jobs survey for August, we saw a 2 million increase in the total number of people who are getting jobless benefits. One other quick number I want to give you here, the trade balance, much, much worse than forecast. It was expected to come in at negative 58 billion. It comes in at negative 63.6 billion. So that's a definite, this is for the month of July, this is a definite drag on the third quarter's growth figures, and it also suggests that there may be something hidden in there about the way the rest of the world is growing.
Mike, I know that Tom's going to want to talk about the trade number in just a moment, but forgive me for jumping forward 24 hours just briefly to the payrolls report. Mike, what has the relationship been like between claims over the last several months and the payrolls report every single month?
Well, they really are two different things, because claims talk about people who are losing jobs, whereas the other number is the residual of the people who get jobs. But it does, in a qualitative sense, put it that way, give you an idea of where we might be going. So the idea that the week we had the jobs survey, we had a bad claims number, is going to weigh on people and their forecasts for hiring overall.
You know, I look, Mike McKee, at this trade balance. I'm so glad you brought it up. That's what we expect from our best in international economics and policy. Michael McKee, this trade deficit is absolutely stunning. This is the back end of the GDP equation. When I hear Peter Hooper at Deutsche Bank talk about Q4, Q1 recession with no stimulus, this number, back to what we saw 05, 06, 07, 09, this is a grim statistic for everyone, including President Trump.
Well, it's a particularly grim statistic for President Trump, and I don't have the numbers directly in front of me, but what we have seen so far since he took office is the trade deficit with China has widened rather than narrowed, and that was his whole goal. So we'll see if that, as we get the numbers in, if that continues. The problem, of course, is all these numbers are released on the internet now, and it takes a while to get them loaded.
Do we have any sense, Mike, about what the imbalance really is? Is it a lack of exports or many imports? And it does matter.
Yeah, I'm looking right now at the trade numbers. Exports were up by 12.6 billion, and imports were up by 22.7 billion. So in this case, our imports exceeded exports by a significant amount. So it is the fact that it's both. We're importing a lot more than we're exporting, however.
Michael McKee, thank you so much. Greatly, greatly appreciate that. Again, here, a real set of data. Someone wonderful at tying these pieces together is Michael Clarity. For decades, he has been looking at the fixed income market, and we are thrilled he could be with us from UBS today. Michael Clarity, how do you sum this together to stagger to the jobs report tomorrow?
Right. So in general, jobs report, the labor market data has been a little bit brighter than we've been anticipating lately. So good news. That said, we're likely to see the unemployment rate drop below 10%. It's still awfully close to 10%. So we're still a long, long way from normalcy. markets continue to trade much more prospects for vaccines than any labor market or other economic data, because it's a little bit more forward-looking. But it's been right news, but starting from a very grim place. So long way to go to get back to normal.
Michael, you are legendary for writing detailed notes about core fixed income principles. Help us with where the nominal yield is right now, minus burgeoning inflation expectations, over to the focus on the residual, the real yield, the real yield, the real yield. Which of those are you focused on?
Well, I think right now, fixed income seems priced for perfection from the Fed. So if we look, inflation expectations have been creeping higher. We're still below their target, but back up to about 1.75%. So back to where we were before the virus hit. Meanwhile, we've seen real yields fall below 1%. So we're about negative 108 basis points. What that's telling you is markets expecting the Fed to be reasonably successful in getting inflation back up, but markets assigning virtually no risk that there's any possible overshoot in inflation that causes the Fed to have to go back to the tight side of the policy framework. So if they get tight, you'll have higher real yields at a point in the future. So 10-year real yields capture that potential for future tightness. So I think, right now we're pricing for Fed perfection. I think we need to see some more risk premium of an inflation overshoot in the market in here. I think we're going to see that real yield start to climb a little bit. It'll still stay low by historical standards, but we're just much too low right now because the markets, has perfect faith in the Fed here.
Michael, help me out with the Federal Reserve. I just didn't understand the fanfare in the last week around Chairman Powell. All he did was formalize what they've been talking about for the last 12, 18 months. We already knew everything he said because it's already leaked into the reaction function of the Federal Reserve. Now he's written it down in a speech, it's codified, formalized, fantastic. Now what are they going to do about it? They want to tolerate higher inflation. Okay, it's not just going to happen like that. How do they generate it?
Right, and that's the problem. So that's why you didn't see a huge market reaction. Lots of words written about it, but market reaction relatively muted. So, the issue here is Fed's trying to send a lower for longer signal, but we have already been priced for lower for longer. Market's saying that, Fed funds rate for the next 5 years is going to be 12 basis points. If you believe that rates can't go negative, which I very, very strongly believe that, there's just not a lot of upside. The market, again, is assuming that the Fed is going to be lower for longer. So this sort of twist, interesting intellectually, but from a practical standpoint on how the Fed's going to behave, it doesn't tell us anything that wasn't already priced into the market.
Michael, you're a longtime Fed watcher. You've been looking at it from the rate side and talking about the latest low-rate policy and formalizing it. I want to pair that with this idea that Mike McKee, I almost said Mike McConomy because that's his Twitter handle, was just talking about the fact that 29 million Americans are receiving some sort of jobless benefits. Is there anything that the Fed can do at this point to lower the jobless rate, or are they basically impotent in achieving that goal?
Right. So, all they can do is keep rates low and try and buy some time. I think, near-term change is really more about whether we get more stimulus or not, whether another stimulus package is coming. That's the critical point to look for in the coming months. The Fed, I think, pretty much all they're left with here is to keep committing to staying lower for longer. And then we do think they'll shift down and buy the long end of the curve a little bit more than they have been. But again, what they're going to buy is peanuts relative to what the Treasury is issuing out there. If you look at the average coupon auction size, it's going to be up more than 50% from March to October. So, a short little stretch, you've grown by more than 50%. It is just a staggering amount of supply coming from the Treasury. The Fed can't absorb all of that.
Michael, great to catch up. As always, Michael Cloherty there of UBS. It's 2020, Tom. It's work from home. And even the strategists at UBS don't wear ties anymore. That's the world we're in. Do you remember UBS when they had that uniform guide, what they had to wear and didn't have to wear?
Absolutely.
Couldn't wear, had to wear?
I mean, we've really seen this profound, John, and when you were sabbaticaling, we noticed this among Fed officials. We had Chairman Powell. John, I don't know if you knew this, Chairman Powell spoke at Jackson Hole, Tylus in the virtual
was
Jackson
there a
Hole.
Jackson Hole last week?
And then Michael McKee did a whole series of interviews with Tylus is a look, and I even untied my tie, John, like this on radio. I'm untying my bow tie so I could bond with Mr. Kaplan of Dallas. Really worked for radio, but of course I have to tie back up, John, because we're going to a SpaceX launch here in about 7 minutes.
Why don't you tie it up now, live on TV, and do something for radio again? Explain to them how you do up a bow tie perfectly, Tom.
The way you do
radio too. This is going to be brilliant on radio.
This is easy.
Please.
I've done this as videos. We'll do it right now. The way you do a bow tie is to tie it just like you're tying an ice skate. That's all there is to it. These bow ties, John, are fancy French ones, and they're easier to tie, to be honest. They're cut a little differently.
What if you've never tied an ice skate?
Well, that's a problem, John. It's a British thing, you know, but in here in the real world, lots of people know that, and it's just like tying an ice skate.
So the real world is anyone that plays ice hockey, and then everywhere else is not the real world.
Then
is
it's
that what you're
football.
trying to say?
Yeah, everybody on the tots can tie a bow tie. I know that for certain. John, let me tell you about...
I don't know why I asked you to do this.
Let me tell you about SpaceX launch right now, John. This is a really big deal.
Yeah,
this is technology forward. This is 60 mini satellites into orbit to really get towards internet for everybody. And boy, have we learned that in this pandemic, how important that is.
Much more still to come on that from New York City and London for our audience worldwide, counting you down to a payrolls report coming up tomorrow. We will bring you that launch very shortly, right here on Bloomberg Radio and Bloomberg TV.
With the First Word News, I'm Rishka Gupta. The CDC says states should prepare for a coronavirus vaccine to be ready just a couple of days before the presidential election. That's an aggressive goal that would depend on shots being tested and reviewed by then. President Trump has previously said he thinks the vaccine will be ready by Election Day. That claim has raised questions about political interference in vaccine reviews. President Trump is once again denouncing voting by mail. He told a crowd in North Carolina that if they vote by mail, they should also go to the polls and try to vote a second time. He said that's a way to determine whether their mail ballots were actually counted. That could lead to voters violating the law if they try to cast a second ballot. And President Trump has ordered a review of federal funding for what he calls anarchist cities. It's aimed specifically at New York, Seattle, Washington, D.C., and Portland, Oregon. All are Democratic-run cities that have had protests demanding racial justice. Any move to restrict federal funds would probably result in a court case. And more job cuts on the way at e-cigarette maker Juul. The company also is thinking about exiting more European and Asian markets. A health crisis surrounding vaping sent Juul into a tailspin last year. The once high-flying company has already laid off about 40% of its workforce and halted its global expansion. No word yet on how many jobs will be cut this time. In baseball, Hall of Fame pitcher Tom Seaver has died. Seaver turned the New York Mets from lovable losers to World Series champions in 1969. He's one of the only two pitchers to record more than 300 wins, 3,000 strikeouts, and an earned run average of less than 3.0. Tom Seaver was 75. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
.46 minutes away from the opening bell in New York City. Good morning to you stateside as we count you down to that opening bell. Equity futures down 0.4%, bouncing off the lows. The economic data in absolute terms, not great, but relative to where we were, improving, Tom. Looking forward to having that conversation on improvement ahead of the payrolls report with Emily Rowland of John Hancock Investment a little bit later on the Open on Bloomberg TV.
That'll be interesting to see, John. Certainly, it's a statistic that drives us to the importance of tomorrow's jobs report. Right now, as we look at the digital dominance, and we see that in Apple, we see that in any number of other venues. There is the digital dominance, the technology dominance of people trying to get back into space. One of them has been Mr. Musk, and this morning, twice postponed. He will do it again, the 12th launch of the Falcon 9. This is the Falcon 7, rather. This is the Starlink satellite sending, Lisa, 60 satellites into orbit. All of this, Lisa, is about linking together the internet of the future.
Yeah, and it's just fascinating to see how much private businesses, the likes of Elon Musk, the likes of Jeff Bezos, are coming out and really supporting the space exploration industry, which is widening around the world as a commercial enterprise. How different than back in the 1950s and the 1960s, Tom?
1 minute away from here, and we're going to see the launch. Then, of course, the first stage rocket they will attempt to recover. That's become routine. I'm still amazed by it. They'll recover it on the drone ship. The history here of this launch pad at 39A at Canaveral is extraordinary. This goes back to 1948 and the first testing of V2 rockets, which at the time were a massive, massive mystery as we took Werner von Braun and the German engineers over to the south, over to Huntsville, over to Florida, and then on to the historic Saturn launches of Apollo, and now Mr. Musk doing something original, this linkage of private with public at Cape Canaveral. Let's listen in right now.
10, 9, 8, 7, 6, 5, 4, 3, 2, 1, 0. Ignition and liftoff.
Vehicle switching downrange. M1D performance is nominal.
Successful liftoff for Falcon 9 from pad 39A.
Telemetry nominal.
We welcome all of you on Bloomberg Radio and Bloomberg Television, SpaceX, the imagery for television and the audio for radio of a rocket powering into orbit. What is extraordinary here is how fast this occurs. 14 minutes out, the deployment of the satellites, and of course looking for that first stage to pop off. Still, as I say, for people that have been watching this for years, something still technologically unimaginable. And Mr. Musk and his team have made it very much a reality to bring that first stage down to earth. Lisa Bramwitz and Tom Keenan, your simulcast. Mr. Farrow's off to prepare for an eventful market opening, of course, with Dow 29,100. Joining us right now, Anand Srinivasan with Bloomberg Intelligence, and of course, our expert on the technology and the computing. Anand, what is so important here is the computing power today. We love to go back to the history of Apollo, of Gemini, of Mercury. The computing power today at its weakest level is factors better than anything they had, isn't it?
It is, and the advancements that we're seeing as a result of the cloud industry's dominance and different vectors of advancement, and you pointed to SpaceX and the Falcon rockets. The original sort of development ideas came from DARPA. So there's dramatic progress being made along so many different vectors, Tom, and it is fantastic to see indeed.
2 minutes into flight, and we'll continue to have us for you on Bloomberg Television. On Bloomberg Radio, we have Anand Srinivasan with us with the images as the SpaceX moves towards orbit and the deployment of these satellites. Anand, I want to go to the digital dominance that we see right now. It may be away from SpaceX, but certainly we've been sobered by technology's dominance in this pandemic. What happens when we get a vaccine? Does technology just continue forward?
Absolutely. I think some of the progress that we've seen, some of the advancements, the transformations that we have seen were already in place, Tom, and were accelerating even before the pandemic. The pandemic just put the things have radically shifted. Some of them have radically accelerated. And we've learned a lot of lessons through this pandemic. We've learned, for example, that remote work isn't that complicated anymore, that e-commerce isn't that disruptive anymore, that we can make progress along these, and in some cases, we'll never turn back to the method of yore. So this is, in many cases, a tipping point for several subsectors of the economy.
Anand, back in the 1940s, 1950s, 1960s, when there was a space race, it was the government financing a lot of the technological exploration. There were a lot of discoveries, mathematics, physics that came out of this that would not have occurred otherwise. They were unrelated to space. And now we have China doubling down on the nation's spending toward software predominance, the idea of the tech wars and the idea of state sponsorship. Is China going to get the upper hand with this sponsorship from the U.S., which doesn't seem to have a comprehensive similar plan?
No, I think it takes a lot of things in order to have that level of dominance. I mean, we have seen this sort of this effort at the national level, either through a public-private partnership or through a government heavy hand or through a combination thereof, being what Silicon Valley has, for example, being tried to be replicated either in the UK, remember the Silicon Turnabout, or the Roundabout, excuse me, or through China's multiple 5-year plans, or through Taiwan's sort of the 1980s dominance, which is seeing a revival now. I think, or Bangalore, for example, in its development parks. I think it takes a lot more than that. It takes a combination of R&D efforts, combination of government infrastructure involvement, and a combination of software presence. It takes talent, it takes capital, and it takes infrastructure. So you got to put all those pieces together, and that's very, very hard to do.
Anand, can you give us a sense of what's on the front lines of the next innovation in the semiconductor space?
I mean, one of the interesting things, for example, is the presence of the cloud, which is taking computing in diverse forms of computing very, very aggressively. For example, we saw relatively sort of staid development when it was just corporate IT involved. What the cloud has done is dramatically expanded the scale of computing, and B is expanded the variety in computing. So if you look at GPUs, for example, right? These were predominantly a gaming sort of gaming-related chip. What the cloud has done is applied the general-purpose GPU to a dramatic variety of computing problems. So I think so. Both in terms of scale and variety, you're going to see chips expand. That's number one. Second is the transistor shrinkage. We've seen some stumbling by Intel. We've seen some advancements by TSMC and Samsung in terms of trying to shrink the size of the transistors in these processors. I think that's going to continue, but I think people are going to be clever about how they develop these advancements. So I think those are two interesting vectors of advancement.
Anand, thank you so much. We've got to get back to the astrology of the moment. I'm making a joke there. Anand Srinivasan joining us from Bloomberg Intelligence as well. On Bloomberg Radio and Bloomberg Television, a simulcast of a space launch, and so far very successful. We have just shown the re-entry burn, which is a very important moment here. The first stage has been jettisoned and is working its way back to the Atlantic to the drone ship. But right now we have that key burn here to get through the process of getting the satellites into orbit again. This is 60 new Starlink satellites which are going to orbit. And the simple statement here is this huge overarching need to drive 5G and the internet forward, the connectedness of the world as well, if you will. On radio, it's real simple. It is a nose cone, rather an engine fairing in space, red hot from the heat. Really remarkable to see the red hot nature when you go back to Mercury and you wonder about the invisibility, how we had to guess what was going on out there. And now we see it with the new technology just beautifully. Lisa, it's something I just can never get over. Every time there's a certain risk, man or unmanned.
Would you ever want to be an astronaut and go into space?
I used to sit in a cardboard box in the basement, and you would fake you were in Gemini or Mercury. That was even before Apollo.
I love it. I've actually gone to the Intrepid in New York and sat in the old space capsules. So much fun. And it really, just the names, Falcon 9, really harken back to an era that was a gilded era of space exploration, Tom.
Well, we're getting back to it with this private and public consortium, if you will. There is the extraordinary, for those of you on radio, the thing I can't get used to, a drone down and landing on the drone ship, like we do that every day. And that is extraordinary. We're going to exit now from SpaceX and get back to the business at hand for Bloomberg and economics, finance, and investment. Here's the business at hand. 900,000 jobless claims is so far from the normal we once knew of 210 and 220,000 that it still bears careful scrutiny, and we will give you that scrutiny into tomorrow's jobs report. As always, we've got a terrific team lined up to go beneath that headline data. William Ackman, Pershing Square Capital, look for that in the 1 p.m. hour this afternoon. This is Bloomberg.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
This is a step in the right direction. Perhaps it's a harbinger for more changes in the future, like the completion of the banking union.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Live on Bloomberg TV for our audience worldwide. It's a good morning to Wall Street. The countdown to the open starts right now with 30 minutes until the opening bell this Thursday morning. Equity futures negative on the S&P 500, down around about 0.5%. We begin with the big issue. The rally hitting pause this morning, the economic recovery continuing.
The economic data looking a little bit better is really fueling this rally.
The market has rallied really strongly.
This incredible rally from the lows set way back in March.
I keep looking for a reason to get bearish.
The data keeps coming in, all showing economic recovery stronger than expected. It's very noisy.
You could start to see this economic data soften.
Let's not forget the labor market.
Really important to see this rehiring continue.
We're still seeing elevated unemployment.
All eyes are going to turn to the labor markets over the next few days.
And that starts right now with the payrolls report 23 hours and 30 minutes away on top of the jobs data. Bloomberg's Michael McKee. Good morning to you, Mike.
Good morning to you, John. We've talked about this all morning, the idea that the Labor Department has changed the seasonal factors that go into jobless claims. And so a big drop in the headline number, but that's not really what happened. So we're going to start with the unadjusted number and point out it comes in at 833,352. That's up by 7,600 from the prior week. The adjusted numbers, 881,000, but that's not going to be comparable to the prior week because they changed the way they calculated. Add in pandemic assistance for freelancers and for gig workers, 759,482. We see a rise there, and you can put those two together. You get 1.6 million people who filed initial claims last week. Total benefits in the week of August 15th up by 2.2 million to 29,224,000. That's the week that the payroll survey was taken. And we get some data this morning coming up in about an hour that will add to this. The ISM services index is due out, and the employment number has been in the 40s, as is the manufacturing number. So we expect that that's going to tell us we're still not seeing a lot of hiring. You talked about what we're going to see in 23 hours and 30 minutes. Here's what's expected. Non-farm payrolls up by 1.3 million. Now, that's going to be positive if we get that kind of number, but it is lower than it has been over the past couple of months. A lot of people are going to be looking at the participation rate, 61.8%. How many of those people filing jobless claims are going to drop out of the labor market? And finally, I just want to point this out, John. The trade deficit went up to $63.6 billion. That is the highest since 2008. And so it is not good news for the president's reelection campaign. The trade balance with China, the deficit with China, $31,620,000, and that is much, much greater than it was when he took office, and that was his goal, to bring the trade deficit with China down.
Just a quick look at the markets, Mike. Equity futures breaking down again, down 22 on the S&P, negative 0.6%. Obviously not connected to those trade numbers, but just a question on the trade figures, Mike. As you see things right now, is that a sign that imports are building because this economy is improving, or is something happening elsewhere?
Imports are building, and that may be the case. Remember, we've seen very low inventories at companies around the country, so people are probably bringing in more goods. Imports were up by 10.9%, exports up by 8.1%. But the total, the fact that we're down $63.6 billion, is going to weigh on third quarter growth, and that may indeed be influencing the markets.
Mike, great to catch you up. The PMI is a little bit later this hour as well. Michael McKee will drive you through the economic data into the ISM out in about 56 minutes, and then the payrolls report tomorrow morning. On the markets, Chris Harvey of Wells Fargo expected the equity rally to continue, writing the following: "We're not ready to leave the dance just yet. We've been talking about the melt up since the start of summer, and it's here. We're recommending a slow rotation to small caps and cyclicality." Chris Harvey joins us right now for more. Chris, you did come on this program. You talked about the melt up. I wonder whether you think August was the melt up, and where we go from here, please.
So what I think is, and what we've said to clients, is typically when we believe everything is priced in, there's one more leg higher. And we're in that one more leg higher. We're in that speculative, that frothy leg. And this is a period where funny things begin to happen. Now, we don't want to stick around too long, but we want to say thanks. We want to start taking profits. We want to begin to rotate. And at some point, we will want to become more defensive, but we're not there just yet. We're still getting ready to get ready, but we are taking this opportunity to rotate and shift into situations that are less picked over.
Well, Chris, what's the risk here that you try and play this a little bit too cute, a little bit too finely?
That's always the risk, and that's something I think about every single day, that we'll have egg on our face, that we stick around too long, and it doesn't work out. But this is not our first rodeo. We've been through this before. We know when we get to this stage of the melt-up, funny things do happen. And what I would say is that this is the period where irrationality, and this will sound not so bright, becomes somewhat irrational. People put on more risk. Risk-taking gets to another level. And so we want to slowly feed into that. We want to slowly get out because we don't know where it ends. Could end tomorrow, could end in several months. So we want to get in motion, and we want to be able to toggle up or down our speed.
Well, Chris, let's talk about that. Sometimes it's just a feeling, but I imagine when you're having that conversation with clients, they don't want to know how you feel. They want to understand the signpost you're looking for, both technical and fundamental, to fade the rally. Can you walk me through those signposts? How you know when it's time to make a move?
So one of the things that we're looking at right now is the election. One of the things that we worry about, especially with mail-in ballots, is the election could be contested. There could be a lot of uncertainty. So that's our end post, right? We know by some point, in highly likelihood, by the time we get there, we'll want to become a lot more defensive. What we're looking at now is just levels of froth. And it's a feeling, it's a view, how are things trading? We're now beginning to see some really funny things in the option markets where some large players are taking some directional bets, leaving a large footprint and pushing things higher. That's not going to last forever. We're taking that into consideration. But the other thing that occurred, which we're still scratching our heads over, it feels like the buy-side community had an investment committee meeting about 3 weeks ago, and they all decided, hey, we need to start pricing in a COVID vaccination. And people have gotten a lot more aggressive since then. Not sure why that occurred, but on phone calls, on trading desks, this is what we're seeing, this is what we're hearing. And so it's a pretty powerful signal, but we're taking the election as the end game plan. We're looking at credit spreads, we're looking at how things trade, and then we're just looking at sentiment and how leverage comes in the marketplace.
Well, Chris, I love the idea there was a secret Zoom call somewhere that you and I didn't know about on the buy side, and everyone just agreed to buy. You mentioned credit spreads. Credit spreads have stopped tightening on high yield. They've basically stalled out. They're not wider, they just haven't done much over the last month. At the same time, the equity rallies carried on rallying. Is that a disconnect for you, Chris, and what do you make of it?
I don't think it's a disconnect just yet. One of the things with high yield, it is somewhat tied to oil and energy markets, which haven't done as well. The issue that we would come into, and the issue that would make us pause, there's probably 2 or 3 things. It would be, are people able to get the liquidity that they want? And they are. 2 is if we see new issues come to the marketplace and they don't trade well, that's a sign that people are pushing back and things have gotten too frothy. We haven't seen that either. But the slowdown and tightening should be expected. It's been a massive run since March. And again, we're beginning to get a little bit cautious. We're getting a little bit more concerned. Our spidey sense is beginning, not quite to tingle just yet, but it's more prudent to begin to take the other side and begin to take profits. So I think you're right in being a little bit more skeptical. But again, I think there's a bit more to go.
Chris, you mentioned the buy side. Let's talk about the sell side. And just in terms of your experience at the moment, that's what I'm interested in and want to tap into. I just wonder if you find yourself as a strategist at the moment almost trying to justify the unjustifiable, to come up with reasons for things where there aren't any reasons for them to happen, but they're happening.
No, I wouldn't say. Maybe other people do that. And this is why we say, okay, this is not our first rodeo. At the end of a melt-up, you should expect some irrationality. That's the rational part of it. So we're not trying to place anything on it that doesn't belong. When people make a lot of money, risk tolerance goes up. And they sometimes do things that are not economically sensible longer term, but in the short term, they're working. They're making money. The phrase I've been hearing is we're playing with the house's money. We're willing to rip up a little bit of money. We can put on more risk. Who cares? Hey, things are still going on direction. Let's push our bets. That to me, I don't agree with it. We're not a proponent of it, but we know it happens. And so we're trying to position around that.
Well, Chris, what you're talking about, though, is not reducing equity exposure. It's rotating, that slow rotation into the more cyclical parts of the market. Cyclicality is a big word. It captures a lot of stories, a lot of sectors. Can you be a little bit more specific on what you're thinking about doing, Chris, and what you are doing?
Yep. So one of the things, we run a model portfolio. One of the things we've been doing over the last couple of months is we picked up some of the transports in the model portfolio. We've added some more industrials. In the communication space, we've added a couple very cheap media companies. And so we're doing things on the margin where we think the risk reward is rather attractive. And we can find cyclicality even in things like REITs that have a bit more cyclicality to them than your more defensive REITs. And so sector by sector, you can find these opportunities, and we're just looking for the quote-unquote best risk rewards.
Hey, Chris, always great to catch up, sir. Good to see you. Chris Harvey there of Wells. Coming up on this program, calls for more fiscal stimulus failing to move lawmakers in Washington, D.C. And the lack of action, the inaction, failing to disrupt this market rally as well. Coming up next, Jim Bianco, the founder and CEO of Bianco Research, right here on Bloomberg.
We are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with a 17,000 additional jobs added in terms of net revision.
You still got 1.8 million with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed. But the good news is that it is continuing. And it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
Europe does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
It seems clear that further fiscal support is needed to provide a bridge for households, small businesses, and state and local municipalities that have borne the brunt of the pandemic until the recovery is sustainably in place.
Cleveland Fed President Loretta Mester seeing a recovery in need of additional government support, but Senate Majority Leader Mitch McConnell not optimistic, saying the following, quote, "I don't know if there will be another package in the next few weeks or not. The cooperative spirit we had in March and April has dissipated as we've moved closer and closer to the election." Bloomberg Chief Washington Correspondent Kevin Cirilli joins us right now. Kevin, for several months, you and I have had this conversation, and for many people you and I speak to, they've said the same thing. It's not a matter of if, it's when this happens. Do we need to question the when now?
No, I don't think we do, in the sense that in conversations I've had this week, they're looking like there's going to be a lot of emphasis placed on coming to fruition the stimulus by the end of the month. And should that fail in the lame duck session in November or December post-election, there will also likely be another opportunity for lawmakers to do this. But still more impasse this morning. We're getting fresh reaction from Senate Minority Leader Chuck Schumer, who says in a statement, quote, "The Republicans are now moving even further in the wrong direction. Their proposal appears to be completely inadequate by every measure." He goes on to say that Leader McConnell and Senate Republicans would be making another unacceptable and ineffective attempt at providing relief. relief. So a non-starter red line coming there from Leader McConnell. We should also note the impact that this is having on the 2020 presidential. A Quinnipiac poll has Joe Biden leading nationally, but dig closer into the swing states. North Carolina, an incredibly important state where President Trump traveled to yesterday, has the president up 2 percentage points in, according to an East Carolina University poll, clearly well within the poll's margin of error. Yesterday, I spoke with Mark Lauder on Bloomberg Radio. He is, of course, one of the top communications advisors on the president's reelection campaign. They're looking to make inroads in Minnesota. This is the Biden campaign eyes Arizona, so a changing map really at play here.
Kevin, what's driving the timing of the last several weeks?
Well, in terms of the timing of the last several weeks, I think that the dominant issue is just how quickly the dynamics of the pandemic are shifting. Yesterday, of course, that report that the CDC is instructing states to prepare for a vaccination implementation as early as November 1st. A nonpartisan group of medical professionals advising the federal government on who ought to get the vaccine, markets eyeing the vaccine, the public eyeing the vaccine, employers eyeing the vaccine for bringing people back. We're entering into a new phase of what a recovery looks like once that science catches up.
Kevin, it's really great to catch up with you, sir. Kevin down in Washington, D.C., 15 minutes away from the opening bell in New York City, with equity futures down 18, call it 19 points on the S&P. We're down 0.5%. The underperformance, it comes from big tech, the NASDAQ futures getting hammered going into the cash open this Thursday morning. Going into the election 2 months away, Jim Bianco of Bianco Research seeing November's election as a risk to markets, writing the following. Recent data suggests the election will be much tighter than most expect. The markets may be caught off guard with either a Trump victory or if Republicans hold on to the Senate. Jim joins us right now. Jim, where's the market risk for you, and what do you think is underappreciated?
I think a lot of people are looking at the polls when it comes to the election, and they're concluding what the polls tell us, which was 3 weeks ago. And we've had 2 conventions, and we've had some protests, especially in Wisconsin. And if you look at the betting markets, they've made a big shift that they think that the election is a dead heat right now. And I think that people are slow on the uptake to say that this has gone from Biden lean to more of a dead heat. Now, that doesn't mean it can't change again. It probably will in either direction, but it is tightening up. It is before Labor Day. There's still 60 days to go. And I think that people that were expecting a blue wave or a solid Trump loss, it could still turn out that way. But as of right now, I think it's a lot closer than we think.
Jim, that's largely because the conversation has shifted away from addressing the pandemic to securing the cities. You've got to anticipate what the big topic will be going into November. Often what happens is you and I talk like there's a single issue that dictates the whole election and then the election goes the other way. But for you, what do you think is the big issue as we count down the next 2 months?
Oh, I think that there's going to be a number of big issues, and I'm fond of saying that the election will turn on events that haven't happened yet and that we can't almost predict. Witness what happened in Wisconsin last week as well, too. But away from that, I do think that the big issue is going to be the economy and whether or not the recovery that we've had since the second quarter lows will continue. Evidence is that it's stalled right now. And what's masking that is the stock market rally. Kevin Cirilli was just talking about whether or not we're going to get a fiscal stimulus deal. And I've worried that the big holdup is the stock market makes new highs, and it sends a signal to Washington. There's no hurry in putting together fiscal stimulus because everything must be okay because the stock market is making new highs, where I don't think that's the case at all. I think that what the stock market is doing is more about what central banks are doing and about liquidity. And what you see in the numbers, especially the ADP number coming in way below expectations yesterday, is more about a stalling recovery, not a reversing recovery, but a stalling recovery. So how that is perceived over the next 60 days, I think, is going to be critical in determining the outcome of the election.
Jim, the tail's wagging the dog. I'm with you on that. But just looking at markets, it just feels like many people are making it up as they go along. We came into August, closed out July. Everybody said the same thing, Jim. I'm using everybody a little loosely. Forgive me. Most people said the same thing. If we don't get a fiscal package, the market's in trouble. We had a huge August. No trouble at all. We're coming to September with the same attitude, Jim. What do you make of that? Does the fiscal package actually matter to some people out there, in markets at least, and markets specifically, in the way that many people anticipated it would?
No, everybody said it, including me. I thought the same thing too, that if we didn't get a fiscal package in August, that it would stumble the markets. But what we've learned in the month of August is there are the inputs and the drivers of the markets, and there are the inputs and the drivers of the economy, and they may not overlap as much as we think. What we got in August, actually, was a Federal Reserve that changed their mandates to become way more accommodative and allow for a lot higher inflation rate and signal that they are going to stay as easy as they possibly can for the foreseeable future. And that might matter a lot more for markets than whether or not we get a fiscal stimulus that will help push the economy forward. That helps for Main Street, but not necessarily for Wall Street.
Yeah, Jim, I mentioned this on the show a little bit earlier with Tom Keene and Lisa Abramowitz. It was something that Lloyd Blankfein had said on a podcast in the last couple of weeks, and something you and I have actually talked about, that you could have received every single data point, every single input, every single policy response at the start of the year for the year to come, and you probably wouldn't have called this market. We're down today, but we're up big time on the NASDAQ through 2020. Jim, how can you explain the moment we're in if you couldn't anticipate it at the start of the year, even if I gave you every single data point you needed?
Not only that, but even if I gave you the data points of the virus count that peaked in late July, you would have never predicted what we've seen going right now. I mean, the simple answer is you really couldn't have. And what you needed to kind of come to the realization of is that market liquidity matters a lot more than we thought. And the Federal Reserve and the federal government, let's not remember, President Trump has tweeted out many times that he was going to bail out just about every industry that was in trouble back in the spring and summer, that mattered a lot for investors. And one last thing I might add, and Chris Harvey mentioned this in your previous interview, there is a froth going on in the options market right now. There is rampant speculation in equity-listed options, and that might be feeding through into this market. So if you're looking for that, maybe some of this has led to a froth, you might have a hard time finding it in the stock market, but look at what's going on in the options market. It is really raging like it was the bubble peak of 2000, if not greater.
Jim, you think it's that bad right now, some of the activity that you're seeing?
Yeah, I mean, you've got 75% of the trading in options is less than 2 weeks to expiration. The majority, maybe 2/3 of the options, is small traders right now. They tend to be very momentum driven and price insensitive as well, too. You've got a break with the VIX index, which is the volatility index, with other traditional measures like the move. And that, I think, is just because of the rampant speculation that you've seen in the options market. So how is all of this liquidity manifested itself? We all look at the stock market going, is it here? Is it here? I think it's in the options market, and it is showing up a lot in a lot of these high-priced tech stocks. That's another way that people play a $2,000 or $3,000 stock price, is they play it through the options market because the premium prices are lower.
Well, Jim, let me ask you this question just to wrap things up, because I asked it of Chris, but I wonder if you've got a different perspective on it. The high yield